Headline is basically we're just going to sit on our hands and wait.
But what cracks, right? What cracks in that environment?
Well, bond yields, the relationship between bond yields and the equity market, I think, is going to be really interesting. If you continue to see maybe equity markets pushing up to 4.5% on a US 10-year, how does that then relate back and figure in terms of equity market discount rate pricing? The equity markets here are open. Let's get a sense of kind of what is happening here. In terms of where the initial weight comes through, Novo Nordisk, one of the granola stocks, is softening up this morning. Total Energy, some of the energy stocks certainly lightening up as well. Looks like some of the luxury stocks are soft as well. LVMH adding some weight onto the downside. Some of the banks are on the upside. L'Oreal's on the upside as well.
Yeah.
I think there's a clear... I'm seeing a lot of sectors in negative territory already, though. Banks look like they could be one area of gains.
The miners as well, quite under pressure right out the gate. Rio Tinto, BHP as well. BP and Shell are also weight on here. So it is some commodity pressure that we are seeing broadly. But we kind of knew that given the macro of the iron ore pricing and, of course, copper prices falling in Asia as well. But it's interesting that at a time when you're seeing bond yields actually bid around the world, banks are actually higher this morning. You don't see that divergence often.
And the home builders, we've been talking about this, the CMA probe, and they're taking a bit of a hit. Persimmon is currently down 2.3%. You're seeing the other big builders as well under a little bit of pressure, down between around 1 to 2%. Again, on the back of this probe into whether or not they've been sharing, the major home builders sharing information, whether it be some cartel activity there.
Maybe it'd be interesting to see whether it's just a knee-jerk reaction.
Right.
There has been long talk of this probe coming through, that there would be some sort of an impact. Sam was kind of outlining just how comprehensive it is. So maybe that it's the detail that the report is pushing through that maybe adding a little bit of weight to the downside on that. But equity markets basically largely becalmed. FTSE 100 is down 0.1%, CAC's down 0.2%, DAX looks like it's up 0.2%. But there's no clear read across here, I don't think, in terms of the news flow we've had this morning into equity markets.
Yeah.
A single stock story, but a wait and see approach.
Yeah, I think your biggest kind of sector mover then is going to be the home builders that you just talked about. If you're talking about kind of what your biggest gainers are this morning in just your top Europe 50 performers, you're seeing Sanofi, for example, L'Oreal as well. It is a little bit of a mix when you look at what's actually moving. Some healthcare names seem to be outperforming.
I can't see a theme there. I'm really struggling. You've got healthcare up, you've got healthcare down. Novo Nordisk is down, Sanofi's up. So single stock story.
Got a little bit of Diageo in there
It doesn't.
Yeah.
I'm looking at this and thinking that there's no clear sense of direction from markets.
Well, maybe not on the upside, but on the downside, I think there absolutely is. The commodity story seems to be weighing down this market in a fairly big way, and I actually haven't seen that in a while because Shell was actually outperforming recently. So was BP. It's all part of this kind of big move in towards LNG in particular. You've actually seen some of the big oil outperform. Today, it is not that story.
And iron ore, I mean, this was well flagged in terms of the pricing that we saw come through from Singapore. Iron ore prices down about 4% at a 4-month low. And so you're seeing the miners pressured on the back of that. So that was something we could have expected. And again, I thought it was really interesting, Paul Dobson making the point that when you think about the Chinese markets, there's this disconnect between the equity story and the fundamentals. And it's the fundamentals, of course, particularly around the real estate sector, that drives what we're seeing in iron ore. And again, you're at a 4-month low in terms of pricing there.
But I think, and this is kind of your area of expertise, if we're talking about over and over these commentary coming from the Chinese authorities about kind of holding up some of these markets. We even heard it from, I think, the Australian government when it came to nickel even, that you're trying to support these markets, that these commodity-specific markets that have just been seeing their pricing collapse. Even these kind of government moves haven't really been able to hold it up.
Yeah, and again, you can have, in terms of the commodities market, there's one aspect. You're not going to, until you get the real estate sector sorted out, and they're working through all the leverage issues, and you need to get home buyers back in, and of course you've got tens of thousands, if not hundreds of thousands of partially built apartments all over China. That still remains a major issue. You can put in all sorts of measures around the equity markets to try and put a floor under, whether that's the state backing or the squeeze on the quants or the start of day and end of day changes. But in terms of changing the fundamentals when it comes to that demand for commodities, it's hard to see how that changes without working through the real estate issues.
I mean, I think the real estate issues then, I mean, we're talking about it in China. We talked a little bit about it here in the UK as well. It kind of feels like it's disappeared from the narrative when it comes to the United States. Remember just 2 weeks ago, this was what Anna Edwards was talking about. She was like, there's cracks in the commercial real estate sector. You look at the commentary, I want to say in the last couple of days, people seem less worried about it.
I'm not sure about that.
Really? Okay.
There's a lot of so I think you've got to separate out the housing market and what's happening in commercial real estate.
Fair.
CRE is definitely still the risk that people are worried about. I read a number of reports over this weekend talking about the idea that maybe we are going to see regional bank crises re-emerging as this CRE continues to develop. It'll be interesting to see how that gets accelerated potentially if we do see rates higher for longer, if the Fed does stick with it. And the data this week is going to be potentially a key factor in that.
Yeah, the data, plenty of other things to watch this week as well. Plenty of Fed speak. It is absolutely backloaded, though, all that coming in on Thursday. But a couple of other things we want to put on your radar as well. Today, the WTO holding its 13th ministerial conference in Abu Dhabi. I do believe we have some good interviews coming out of there as well. At 4 p.m. London time, ECB President Christine Lagarde speaking in EU Parliament. Is she going to change the narrative around some of the data that we're watching, around some of the ECB thinking? Regardless, something that we are certainly watching as well.
Can the ECB go first?
I don't know. I don't know. Can they? You tell me.
Well, Robert Holtzman was on this air on Friday telling us he thinks no. He's much more at the hawkish end of the spectrum.
Yeah.
But I think that's a live debate as well. What would be the implications of the ECB cutting rates before the Fed?
I don't know. I feel like it would kind of be a no-brainer, though, because it's not a secret that Europe is weaker than the United States from an economic standpoint. No, they've never done it before, but there's a lot of things in the last couple of years I've never been done before. 2.5% inflation
on headline basis this week out of the Eurozone. 2.5%. You know, so that progress has been made on a weaker economy.
Yeah.
So the idea that you wait until the Fed cuts, I know, so some would find that difficult to stomach, obviously, but the hawks are there with that view.
They absolutely are, and the commentary will be interesting coming off of the data that then you're going to see in the back half of the week. The PCE numbers coming in on Thursday, more ECB speak on Friday as well. There's a lot going on there, but let's get in a little bit more context on how this equity market may react to it. Maria Feitman, a head of equity research over at State Street Global Markets, joins us this morning. Maria, pleasure to have you on the program. A lot of eco speak, a lot of this inflation data. Does any of it matter to these equity markets that seem to be on a roll?
Yeah, hello, good morning. And I think that's a really good question, because we had a lot of data that potentially is really challenging for equity market. You have, U.S. economic surprises almost at the highest level, like in 20 years, if you exclude COVID period. You have hotter inflation. So you have a lot of narratives. You have fairly weak earnings season. So you have a lot of narratives that should throw equity markets out. But markets seem to kind of discount it and kind of carry on higher. And I think there is like really strong momentum behind the equity market. And a lot of it to us is linked to low volatility, and it's still low, and investors get sucked into this positive equity trade.
In terms of this positive equity trade, though, I'm curious how much the bond market actually matters here. One of the main conversations that we've had for, I want to say, weeks now is whether or not upward momentum on yields actually affects the stock market in the way that it did circa 2021. Maria, does the bond market matter to this equity market?
I mean, it's interesting because in end of last year, we had a sharp decline in equity in bond yields when we were thinking, okay, well, we'll have a lot more cuts, and that supported equity market. Now, a lot of those cuts were taken out, and equity markets are even higher. So it's, I mean, in theory, they should matter, but it really doesn't seem like.
Maria, on the margin story, and you've been kind of long, you've been early in this, talking about the need to find that margin resilience. I remember talking to you about this last year. How has that story evolved? We were talking to our chief strategist earlier. She's like, the earnings story has shown that the inflation stickiness has proven positive for a number of US corporates in terms of their ability to push through profits and higher margins. Where are you finding that resilience?
think it's interesting that overall, kind of, you can say, okay, earnings season has been relatively okay. We had companies exceeding expectations and earnings beats, sales beats. But actually, if you look under the surface, it's really like tech sector has been amazing, as we know, and lots of other sectors really, really struggled. And if you look at performance again, what's happening is tech sector is doing, tech communications doing really, really well. Worst performing sectors are materials like real estate. Those are sectors which are seeing massive margin pressure. So I think on the top level, on aggregate level, yes, everything is kind of okay, but really under the surface, we're seeing a lot more cracks. And so I think internal mechanics of equity markets is really, really worrying. So I think I mean, so you've been very generous kind of talking about kind of how earlier we were talking about margins, but really the story for equity markets is, I mean, we keep repeating ourselves, is cash and tech. So tech is doing fantastically well. Everything else is not great. So you go to cash. So that's really the trade for us.
What changes that momentum, Maria? How long do you chase the tech story? You could argue that valuations look good. If you put normal kind of discount models, it doesn't look good. But if you take a look at the tech sector, you look at the momentum that it's got. What is there a reason to sell tech at this point? Can you see one?
Well, I love tech sector, so that would be more difficult for me. But I think in general, what tech is quality, stability of earnings, decent margins. And I think at this stage of the kind of earnings and economic cycle, when we are in the camp when recession is probably harder to avoid because rates stay higher for longer. So at this stage of the cycle, when things are getting worse, not better, you stay with quality, with stability, with large caps. So that's tech for you. Yeah. So that momentum, it's quality, and that's why investors have to pay those higher valuations tech commands now.
So in some ways, it's a similar story in Europe, and we've discussed this previously. But again, over the weekend, the Goldman Sachs line about there being granolas in Europe, basically a key group of stocks that are driving all of the gains at the moment. Is that if you're going to own Europe, can you only own that area? Can you own Europe more broadly? You talk about the fact that you just don't have the earnings momentum in Europe, but those kind of key stocks, kind of what's happening with Nestle, Novo Nordisk, LVMH, that is where the momentum is. If you're in Europe, do you have to be in those stocks? Are there other areas where you potentially could be invested here as well? Or is Europe just a bust right now, considering the earnings story?
So for Europe, I worry about kind of this manufacturing cyclical kind of anchor that kind of dragging European economy and European market in general down, in a sense that, yes, we are potentially in the midst of kind of manufacturing recession, so you don't want to own European cyclicals. And lots of people come to us and say, okay, Europe is cheap, Europe is value, why don't you buy it? I don't want to buy European cyclicals. I don't want to buy industrials and materials and lots of discretionary stocks in Europe. You're right, there is a group of stocks, and they are large cap quality growth stocks, your luxury goods, your branded consumer goods. So those companies, yes, they are okay. They are kind of, I don't know, European equivalent of US tech. But everything else is quite cyclical and manufacturing, and that's a difficult proposition for us to buy.
Maria, has the window closed? Has the door closed on the Japan trade? Japanese stocks up, the Nikkei is up about 43% over the last 12 months. We've got inflation data out of Japan later this week. There's an expectation that maybe softer inflation could pull in more fund flows into the Japanese markets. How do you play that?
I mean, for us, the strength of Japanese stocks is very, very closely linked to the weakness of Japanese yen. And I think I often kind of subcontract the decision on Japanese stocks to my FX colleagues, is that if you really believe that that yen weakness is kind of had its day, and BOJ needs to adjust the yield curve control and kind of overall kind of easiness of policy, then yes, then the time kind of finished on Japanese equity trade. So to us, it's really about currency. So there is a very, very strong link between yen weakness and Japanese equities. I mean, we know Japanese stocks are kind of cyclical manufacturing exporters. So weakness of yen is really what supported it. other. I mean, we would probably attribute a lot of strength in Japanese equities to yen other than kind of structural reforms. And we are worried that yen weakness potentially had its day.
Maria, talk to us a little bit about risk sentiment here. We kicked off this program talking about whether or not what's going on in these Chinese equity markets is even relevant to the rest of the world in a way that it was a couple of years ago. Do we start to see some sort of resurgence of what happens in China affects the European markets, affects the American markets, or is that something of the past?
Yeah, I think the brilliant chart you can draw is if you draw MSCI emerging markets and MSCI emerging markets ex-China, and for the last decade it was one and the same line, and for the last year and a half it's really diverged. So China is really its own story, and even for emerging markets and less so for developed. So China is really decoupling, and a lot of it has to do with Chinese domestic kind of policy issues. I mean, you earlier in the program talked about kind of need for structural reforms as opposed to kind of stock market support. That's really where we see it. So a lot of what we've seen out of China is very much targeted towards stock market as opposed to kind of underlying structural problems that needs to be addressed, like property markets, lower savings rate, lower productivity, lower kind of trend growth that needs to be addressed, and kind of regulatory, I don't know how to put it, arbitrariness. So policy comes in and out without kind of very strong direction. That's what's keeping Chinese stock market on a discount to what it could have potentially been.
Maria, great stuff. Thank you very much indeed for joining us this morning. We really appreciate it. Maria Vedmana, Head of Equity Research at State Street Global Markets. We greatly appreciate it. We welcome now our Bloomberg television and radio audiences. We're joined by Sarah Cardell. She is the Chief Executive Officer of the CMA, an organisation which this morning has launched an investigation into the house building sector here in the UK. Sarah, thank you very much indeed for joining us with the details on what is happening here. First of all, can you just give us a sort of size and scope as to what this investigation is going to be looking at? The report is incredibly detailed. I'm wondering how long it's going to take to work through this process and what potentially you see coming at the end of it.
So let me just put this in context for you. What we've announced today is actually the completion of a year-long market study looking at the wide range of factors driving how the house building market is working across England, Scotland and Wales. And what we've seen there is that the markets need significant interventions to deliver enough good quality homes in the place that people need them. And we've identified three broad areas of concern. One is the Competition Act investigation, and I'll come on to that. But just to set this in context, what we found first of all is that there's a significant shortage of supply of new build homes across England, Scotland and Wales. And there are two key drivers of that. One is the complexity and the unpredictable nature of the UK planning system, and the other is the inherent limitations of relying on speculative private development of new homes to build the new homes that we need across Great Britain. Second area of concern is looking at poor outcomes for new homeowners, particularly in relation to private estate management charges for public amenities like open spaces, green spaces, roads, sewers. Also concerns about the quality of some new builds. And then our third area of concern is around the potential exchange of commercially sensitive information relating, for example, to sales prices, sales rates, incentives offered to new home buyers. So that's this third area of concern. Now, I should say we don't believe that that conduct is the fundamental driver of the poor outcomes in this market. But clearly, it's absolutely critical that no company is involved in breaching competition law. And that's why we're launching a new separate Competition Act investigation today.
Given the volatility that we have in the planning system, how do you separate that from the competition that exists between the house builders? It strikes me that there are such structural rigidities and the vagaries of the system is so unpredictable that it's very hard to understand what is causing what and what is a reaction to what. How are you going to be clear in demonstrating that all of the actions that the house builders are taking are not in reaction to a very complicated planning system?
Yeah, absolutely right. What we've identified through our year-long study is a number of factors in the planning system that we believe are contributing to poor outcomes in this market. So we recognise that this is a complex policy space where there are important decisions to be taken by elected governments, the UK government, the Scottish and Welsh government too. What we've done in our report is put forward a series of proposals for consideration that we believe could significantly improve the way that the planning system is working. And that includes, for example, better use of targets, better monitoring and enforcement of local plans, improvements and streamlining to the decision process for planning applications, the consultation process, reducing potentially the number of consultees, improving and enforcing time limits for those consultees to respond, and also importantly, improving the support that's offered to small and medium-sized house builders as they navigate the planning system. Now, all of those measures we believe could drive significant improvements, and that will enable house builders to engage with that planning system more effectively and ultimately enable those house builders to bring more homes to market more quickly.
Sarah, it's Kriti in London. A pleasure to have you on the program. Why choose a cartel investigation instead of a market investigation? The CMA has the ability to impose certain legal orders with a market investigation. Why not just do that if you're so concerned about this market?
As I say, we've completed a year-long market study, and as a result of that study, we have put forward a number of specific recommendations in relation to the concerns we've identified in relation to quality and estate management charges, but also a package of proposals for governments to consider. And the reason that we have done that is that ultimately a lot of the decisions that need to be taken to improve the way the house building market is working really are decisions for elected governments. This is a complex policy space. We have used our in-depth market study to provide information and objective analysis to support governments in taking those decisions. Now, separately, where we identify evidence that suggests there is anti-competitive behaviour, sharing of information in relation to confidential prices and other data, now that clearly is an area for us to tackle directly, and that's why we've launched a separate Competition Act investigation today.
Understood. Sarah, you also mentioned commercially sensitive information between some of these firms. Can you elaborate on what that kind of information looks like?
So as we've said, this is obviously the beginning of an investigation. We have, through our market study, seen some evidence potentially that a number of these companies are exchanging information relating to the sales prices that they are targeting at a local level, information relating to sales rates, new build. Housing often offers some incentives to home buyers to buy their properties, and we've seen some evidence potentially of exchange of information in relation to those incentives as well. So it's that kind of exchange of information that we are investigating. It's important to say that this is just the beginning of an investigation. We haven't found conclusive evidence at this stage that the law has been broken, and we also don't believe that this conduct is driving the fundamental poor outcomes in this market, but clearly it could be a contributing factor.
Sarah, you mentioned the quality issues around some new builds. We're about 7 years, we're closing in on 7 years since the Grenfell Tower tragedy. There are still tens of thousands of leaseholders still in buildings and apartments and flats where they either have cladding issues or internal fire breaks haven't been put in by the developers. Are we still building bad quality new build homes, and what will the penalties be for the developers who have been behind this?
We've looked at the quality of new build, and actually what we see is that many homeowners are satisfied with the quality of their homes when they buy them. What tends to happen is that you see snagging issues, more problems arising over time, and it's really making sure that home buyers then have good access to redress, to the opportunity to get those problems fixed rapidly. And that's where a number of the issues that we have identified typically arise. So what we've proposed in this space is a set of specific recommendations that we believe can be implemented directly. Again, these are recommendations to governments, to the UK government and the Scottish and Welsh government, to do things like introducing a mandatory single consumer code so that all home buyers are protected to the same standards, introducing a new homes ombudsman service so that there is a clear route for redress for home builders. It's critically important that people buying new homes can get access quickly to resolve quality issues when they arise.
Sarah, final quick question. We're already starting to see evidence. We've seen deals announced that we are going to see consolidation within this space. Do you think that consolidation should wait until your report has been concluded?
So we would look at any consolidation through our separate merger control lens, and that can happen in parallel with any other investigation.
Okay, is it a concern, Sarah, that we're starting to see that consolidation? Do you think it would lead to a lack of competitiveness? Do you think it would lead to a challenge and a shortfall for potential home buyers? Is there a level of concern about consolidation in this sector?
We have to look at each potential acquisition or merger on its own merits, and that's something that we will do through our merger control process to understand whether any consolidation does give rise to those sorts of concerns.
Okay, Sarah Cardle, Chief Executive of the CMA, on the back of this investigation with the details. We really appreciate your time. Let's check in on these markets then. Across your sectors, top of the list is travel and leisure, gaining just 0.5% on the downside. Basic resources, and again, we've been tying this to the softer iron ore prices in the session today. You tie that to the China story. Basic resources as a sector down 1.4%. Energy also under pressure, down 0.8% across your sectors. And then just breaking it down on a company-by-company basis, Bank of Ireland down 10.4%, the biggest loser. In terms of some of the gains, you're seeing that come through for Rolls-Royce and International Hotels Group as well. A few gains there between 1 to 2%.
Miners on the move, unsurprisingly, given what we're seeing in terms of the data we're seeing, both in terms of iron ore and in terms of copper. People have long speculated that we're going to see the iron ore price rolling over. It got very toppy for quite some time. We're now starting to see that, and it's manifesting itself quite quickly. You could argue quite quickly. Maybe post numbers, we're seeing an acceleration into some of these mining names. Rio, Anglo, both softer today.
But seeing probably not as much softness on some of the others as well. So perhaps a broader sectoral story as well. A couple of rating changes are also coming up on our radar. BASF and ASOS both moving. Is it ASOS?
ASOS.
ASOS.
Was it as seen on screen? That's what I always thought it stood for.
Is it? I'm learning so much.
Yeah.
I
could be wrong about that. My fast fashion knowledge is relatively limited.
I don't think I'm the person for that. But BASF is one of the ones that we're watching as well. Raised to a buy over at Stifel. Those shares higher by about 1.2%. But ASOS, whatever you call it, down by about 1%, cut to a hold over at a SocGen. So again, seeing a little bit of pressure there.
Let's check in on the car makers as well. I'm glad I'm not pulled into the fast fashion story because I have very little to add on that. But it is ASOS.
I don't have much either.
That's what I know. Kritty, in terms of the auto sector, we know there's the Geneva Auto Show. There's going to be some unveils from the likes of BYD. We've seen their super luxury car that they've launched in China with a massive price tag, north of $200,000. But in Geneva, you're going to get some reveals as well, some of the big European automakers. So watching that as well. But currently, as you can see, a little bit of pressure coming through for these automakers.
They want to compete with Ferrari.
Yeah.
I'm slightly struggling. You can only buy it in China there, I think. True. Initially.
0 to 100s in less than 2.4 seconds.
Electric cars have a lot of torque. They go very quickly from 0 to 100.
Would you do a test drive of that? 0
I'd love to.
Yeah.
Absolutely. That'd be a lot of fun.
Let's put that in.
I think that's what our next kind of show field trip should be. We should all just go test drive cars.
Yeah.
I still think I can drive faster than all of you.
Maybe a few shows that have already sort of tried that one. There's a few airlines that we need to talk about. There's a Barclays downgrade, I think, on Lufthansa. We'll talk more about the airlines a little bit later. This is Bloomberg.
There is no digital without chips, and I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Markets Today. We're about 30 minutes into the European trading day. A little bit of a nothing burger when you look at these markets. Eurostoxx 50 literally unchanged at the moment. The FTSE 100 as well. You are seeing some initial downward pressure kind of getting paired when you look at those losses, but it feels like we're just kind of in a wait-and-see pattern, right, Guy?
We are absolutely in a wait-and-see. It's a bit of a theme on Mondays, certainly at the moment, with a lot of data backloaded into the latter part of this week. We're not going to get payrolls this week, which is interesting, but it is the first Friday. We've got an awful lot of other data that we're going to be managing our way through. Inflation data out of the Eurozone, inflation data out of the US, UMISH, ISM Friday, a lot of Fed speak to digest as well. You've got some M3 data tomorrow, which is going to tell us a lot about what's happening with the credit story.
Plenty of ECB speak as well.
Plenty of ECB speak as well. So there's a lot going on, but just not today.
And a couple of auctions as well.
There's a lot of supply. So
there's
a lot of supply.
The story is interesting, isn't it? So yields are a little lower across the curve in Ascension Day. Obviously, still comfortably above that 4% level, whether you're looking at the 2s or the 10s. The inversion has become a little bit more pronounced, has it, in the last few days? But so far, the market has been able to absorb the issuance. I think it's a lot of shorter dated paper this week, but that is potentially another catalyst.
Yeah, belly of the curve, right? 5-year, 7-year. But even within that data, the piece of the puzzle that we're actually not getting is a lot of that wage story, which is, to your point, even if it is the first Friday of the month, we're not getting that payrolls data at a time when the PCE deflator is expected to come in hotter. There's questions about supply. Yeah. It's the one missing puzzle piece.
So you've got back into last week. In some ways, you could argue it's a bit of a surprise that yields did what they did, i.e., came a little lower, i.e., we see a bid coming back into the bond market. Then you get this week, we get the inflation data, as you say, potentially hot. You get an awful lot of supply. Those are two factors that potentially could impact the front end of the curve, and then also the back end of the curve when you think about what's happening with the supply story. So it would be interesting. The supposition must be that after the bid last week, you come into this week, maybe that bid starts to become a little bit more fragile.
Potentially. I feel like it could go either way, to be completely honest. It feels like this is a market that can easily kind of collapse under one data point, but can also easily brush it off. But
do we push up through kind of into the 4.3s, is the 4.4s? Ultimately, we're heading back towards sort of 4.5. Is that the direction of travel? And we're going to find out a lot about this week, but the message from the Fed is very clear. We are going to wait. We think the greater risk is acting early, therefore we're going to wait. and see what happens with the data. But that feels like it's been priced in.
Yeah.
So the data now maybe does the heavy lifting in terms of the market moves that we're going to be seeing.
And as we're kind of waiting for the macro pieces to come together, there are still plenty of micro conversations be happening, especially around the wage story on both sides of the Atlantic.
Yeah, we're going to talk about that now. There's a number of different airline stories. And to my view, I may be biased in this, but if you want to know what's happening with the global economy, take a look at what's happening with the aviation sector. Therefore, the perfect person to talk to is Bloomberg's global editorial leader for aviation, Benny Campbell, joins us now. Benny, I want to start with talking about Ryanair. Michael O'Leary, MOL, a little hot under the collar. He's not going to get his 737 MAXs that he's ordered from Boeing for understandable reasons. That is going to affect his summer schedule. He now wants compensation from Boeing. How big a number potentially could we be talking about here?
Hi, I mean, that's unclear what kind of number we're talking about. I mean, you've got to remember Boeing in some ways have their arms tied behind their backs by the FAA. They only have a limited number of planes they can produce, and that is rippling across to customers like Ryanair. And as you said, some pretty salty language from O'Leary there that I won't repeat on the family news service that we're on here. So he's very unhappy. The original number they had hoped for by June was close to 60, sort of 57 planes. Now we might have as few as 40 aircraft coming in, and that's really going to hurt their capacity. And you've got to remember, airlines generally, and particularly sort of tourism-focused airlines like Ryanair, they make all their money, or most of their money, during this period. And so that significant cut, that's going to hurt them.
Benny, there's a story that we've been tracking, you guys have been tracking, about the possibility that Scott Kirby might be shifting at United his MAX order into Airbus A321s. A, does Airbus have the slots? And B, if he could do that, do other people try and follow? And how big a blow would that be for Boeing?
It would be, to start with that last question, it would be a massive blow. United obviously is an absolute marquee customer. You know, there's very few of that caliber out there. So whatever they do, everyone takes note. They have very close relationships with Boeing. But you mentioned the problem that exists. You can't just walk over to the rival, in this case Airbus, and say, hi, can you sell me some A320s? Because frankly, the slots are sold out until sort of 2030. So what Airbus is trying to do now, as we understand, is trying to scrape together as many slots as they can. They're going to sort of customers that might be able to get rid of them or defer them. They're going to lessors. Now, will they be able to replace all the 200 and maybe more 737-10s that United has on order? Unlikely. But even if they can pick off just a couple, that would be quite a blow to Boeing.
Yeah, so of course Airbus in a position to take advantage, and yet they can't because of the backlog and the need to supply their existing customers. As you say, until potentially 2030, it's remarkable. When it comes to Ryanair, you touched on this, the importance, of course, of the summer season. They're not going to have the aircraft they would hope. They're going to have to change their schedules. Do we know how much of a material impact it is likely to be over the crucial summer season then?
It's a bit of a guessing game at this point, and even O'Leary said he can't be entirely sure. If we take the negative assumption that they'll only have about 40 aircraft coming in by June, he said we might actually have to reduce our target in terms of the passengers that we'd hoped for. They'd hoped for 205 million. That might come down to 200. But crucially for customers, for the flying public, it will mean higher fares. He said that fares might have to go up as much as 10%. You've got to remember we're in an incredibly capacity-restrained market right now. It's not just Ryanair. We have Wizz, we have Lufthansa, we have EasyJet. They all have their issues with aircraft, all different. In Ryanair's case, it's Boeing. In Wizz's case, it's the A320s that have engine issues. So a lot of aircraft either not coming to the airlines or they're on the ground for inspection, and that is really hurting capacity.
Benny, we have to talk about Lufthansa this morning as well, talking about management, talking about strikes as well. It looks like they're in talks when it comes to kind of really bringing an end to some of these issues. Where are we on the strikes? How much of a hit is it going to be to its bottom line?
Well, we'll hear about that next week. They report earnings on the 7th of March, so that's towards the end of next week. But in terms of the hit on the numbers, and on their operations. It's quite significant. We've gone through these rolling strikes. At Lufthansa, there was pretty much no traffic for one day last week. I think it was Tuesday. And obviously, the company is trying to avoid that. If you look at the stock, it's down quite a bit this year. It's the worst European airline stock globally so far this year. And operationally, the company's actually doing okay. You know, they're making money. You can probably expect some pretty good numbers in terms of the earnings out of Lufthansa next week, but they have to get their operations in order. And you mentioned it, they announced some pretty significant management changes last week, and that is part of this. This is Carsten Spohr, the CEO, and the chairman, Clay. They're both trying to sort of right the ship, as it were, and the strikes are one part of that. We'll see some offers in the next couple of days, probably, but generally also with this new management team, they're trying to give the company a new direction.
All right, Bloomberg's global editorial leader on aviation, Benny Camel, we thank you so much for joining the program. Guy, this is your area of expertise. What do you make of what?
So all I heard there was inflation, okay? That's all I heard. Airfares are going to be higher this summer, potentially significantly higher.
Yeah.
That's going to be inflationary. We all are determined to still go on holiday, so we're going to pay those higher fares. If Ryanair is raising prices, then everybody else, believe you me, is going to be pushing their prices up as well. And then you've got the labour story.
Yeah.
You are, in order to resolve some of these strikes, they're going to have to settle. They're going to have to propose a decent deal. That's the wage story. That's what the ECB is worried about. So what I heard, all I heard from Benny there was there is a huge inflationary read out of the aviation sector into the wider economy, which is something that the ECB is going to have to deal with.
I think in comparison to the U.S., and you brought this up earlier, the wage story is completely different. I think the last time we looked at some of this Lufthansa deal, they said it was like a 12% increase or something like that they were looking at. That is nothing compared to what you were seeing in the United States.
Yeah.
But my question is, if you're able to navigate it in the U.S., why can't you navigate it here?
In terms of paying...
If wages are such an upwards pressure or downwards pressure, whatever, on margins, 40% increases for pilots at United, for example, et cetera, and then you're talking about a 12% increase in wages for Lufthansa employees, why is that not manageable in the way that it may be?
I think it probably is manageable.
Okay.
But my point is that it is just inflationary. Like a 12% wage settlement is an inflationary factor that the ECB is going to be looking at. If you continue to see this replicated elsewhere, are you going to end up with the worst case scenario? Let's talk about Germany. Very low growth.
Yeah.
High wages, stagflation. That's got to be the worst outcome in all of this. And maybe that's what we're potentially going to be seeing. But it does also come back to the fact that the European consumer still has money to spend. So the service side inflation story is still going to be there.
And that is the stickiest component right now, isn't it? And Neil Sorahan, the CFO, when he came on to talk about the earnings, was saying, look, and I asked this, when are prices going to come down? Because we're feeling, people out there are feeling the pressure, but
Holidays
they continue to
expensive.
spend. Holidays are expensive. You need to be booking 18 months in advance or whatever to get anything close to a decent deal. He said he doesn't see that on the horizon, to your point. Price is lower. I mean, they keep going up.
I feel like my gauge of like what a cheap flight is very off because I think I was looking at fares to Europe and it was like $200 for a round trip ticket, and apparently that's too expensive was what I'm being told.
So the really expensive stuff is during school holidays and half terms. If you can fly, so Critty's theory is you fly on a Tuesday.
Yes, you fly on a Tuesday, you come back on a Sunday, and it's like the best. Let me tell you, I flew back a couple hours ago from New York, had a window seat, 2 empties next to me. New York to London, easy flight, super easy round trip.
Fly on a Tuesday to Sunday, come back on a Sunday.
It's the way to go. plenty there to watch. But to your point, it is an inflationary story that matters. I want to bring up another story that we are watching in the European Union. EU finance ministers at loggerheads over how best to unify capital markets in the face of those mounting geopolitical challenges. Joining us now for more is Bloomberg's Zoe Schneeweiss. Zoe, walk us through the capital markets disagreement that seems to be kind of overtaking Brussels and a lot of the European finance story at the moment. What do we need to know?
So Europe has been trying to come to grips with some sort of capital markets union for years now. Each year we hear some dedication, some comments that they say, yes, we need to be more competitive, and making us a capital markets union will make us more competitive. But there's been very little action. Yeah. So now at the moment, Patrick Donohoe is in charge of that. He's the head of the Eurogroup, and he plans by, let's see, March 12th, to come up actually with a proposal of these are the steps we need to take. The problem is, and he spoke with my colleague Jorge Valero over the weekend, that he highlighted that there are the views of member states on this are really divided. Some of them want more cooperation. Some of them say the current system of equilibrium between a centralized system and centralized body and the national regulators actually works quite well. So he has to come up with a proposal that all member states actually want.
Okay, and we don't get a deal, really, of course, until you get that sign-off from member states, but of course France, Germany playing that oversized role as ever. We've been hearing from the French Finance Minister, Bruno Le Maire. What has he been saying?
So Bruno Le Maire came out quite strongly over the meeting in Ghent that we had over the weekend. He said that he is fed up with the situation, that China and the US are not impressed at all these statements of intent without any action. He says they want strong action, and what he actually is suggesting is that the countries that are willing go ahead and start this capital markets union. So this doesn't have to be many. This could be 3 or 4, and we've heard that the Netherlands and also Spain, while they would prefer a Europe-wide agreement, that they actually would be willing to start off with a smaller group just to get things moving. The one question here is, will Germany go along? The German finance minister, Christian Lindner, said that he very much prefers the global, the European one here, but maybe, obviously these are strong ties between Berlin and Paris, and let's see if Le Maire tries to convince Lindner bilaterally to join this kind of group. If that happens, that would be quite a significant move.
Okay, Zoe Schneeweiss, thank you very much indeed for the latest in terms of those conversations, joining us out of Frankfurt. We're going to bring you live pictures now from Brussels, where farmers are continuing their protests, or at least have restarted those protests. This is as, by the way, EU agricultural ministers are meeting. And of course, we have a number of demands coming through from agriculture and farmer unions, not just, of course, in Belgium, but we've seen similar protests in Germany and France as well, particularly concerned around ends to some subsidies around fuel, for example. And you can see those live pictures, tractors there, blocking some streets in, of course, the Belgian capital of Brussels.
And as we monitor that story, we're going to do a little bit of a pivot. Coming up on the program, Warren Buffett warns that there'll be a no eye-popping result as Berkshire Hathaway build up a record cash pile. We're going to be discussing whether he's right when he says there's no meaningful deals to be done. Stick with us. This is Bloomberg.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the gel razor, and today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
This is Markets Today. We're about 48 minutes, into the European trading day. Seeing a little bit of softness when you look at these markets. The Euro Stoxx 600 down about 0.2%, but it really does feel like a macro story. And we're waiting for a lot of the data later this week. A couple of weights down from the miners and other sorts, some outperformance from the banks. Nothing I would call something that's going to perhaps carry throughout the rest of the week. That being said, there is a story that we do want to keep an eye on. Berkshire Hathaway in particular saying its cash pile jumped to a record $167 billion in the fourth quarter. Chairman and CEO Warren Buffett has warned that a lack of meaningful deals means that, quote, an eye-popping performance may be unlikely. Bloomberg's Charlie Wells joins me now with his own eye-popping performance. Walk us through the rationale behind this record cash pile.
Yeah, well, I mean, look, surprise, surprise, Berkshire Hathaway has more cash than maybe it knows what to do with, at least at this moment. And this is a sort of annual rite of passage when Warren Buffett writes this letter to investors. He uses some kind of folksy turns of phrase. This year he talked about Birdie, his sister, a number of times, and how he wanted to explain things in a way that she would understand. The rationale here, though, is he just doesn't see deals. He said that everything's basically been picked over in the U.S., and he really said he saw nothing outside the U.S.
He's waiting for a crisis, isn't he? So Buffett has got an amazing track record with this kind of stuff. Occidental's one of them. Goldman Sachs, what did he put? 5 in and got 3 out. He got a 10% dividend yield. Bought a whole load of preferred. He is really good at waiting and diving in when others aren't. I'm assuming that that's what he's looking at here.
Well, I mean, look, he famously said, be fearful when others are greedy and greedy when others are fearful. So he's probably looking at stock markets over the past few months and thinking, do I smell greed? Maybe I want to wait this out. And I think there's been some speculation over what he might do with some of this cash. Investors have been asking for a long time. There was some interesting stuff in his F-13 filings that came out just a few days ago. And Berkshire Hathaway requested some anonymity on some of their purchases. And so there's been some speculation about why they might be, but there was no clarity offered in this letter this weekend.
And it was the first letter, of course, since the passing of Charlie Munger. And he referenced again Charlie Munger's line that you want to buy when the company is excellent and the price is fair, rather than excellent price and fair company. How did Charlie Munger feature in this letter?
Very prominently. And so we kicked off this sort of in memoriam to Charlie Munger in the beginning of the letter. But it was interesting, you know, there was a lot of references to Charlie Munger, but also a look at the future. And I think this is something that, you know, Warren Buffett, who's advancing in age as well, needs to think about. And he referenced Ajit Jain, who runs insurance businesses at Berkshire. You know, he's certainly an insurance whiz there, but also Greg Abel. And in the letter, Warren Buffett literally says he is ready to be CEO tomorrow. So certainly looking at the past, but also thinking about what's coming ahead.
That will certainly be a passing that everybody will mourn significantly. What a man in terms of the impact that he and the rest of the team had on the U.S. economy, the global economy. Obviously, I'm getting a little ahead of myself here. Fantastic to see him still kind of so strong and so interesting over the weekend. But look, Charlie, thanks very much indeed. But look, guys, here is a guy that you could argue effectively rescued the U.S. economy. Here is a guy that effectively rescued the U.S. banking sector. 2008, steps in, Goldman Sachs in real crisis, injects money just at the right system, stabilizes the banking sector, a sector that is already causing significant concerns around the world. Can you imagine if he can do that again? Can you imagine if he get another? But where are those deals? he talks about the absence of them, but I'd love to know where he thinks the crisis is going to come in the US economy.
Has he scrutinised commercial real estate in the US,
exactly.
those regional banks?
Where does he see the crisis? Yeah. Where could he see the crisis?
Well, I mean, he has this massive insurance business as well. I'm curious if he's not seeing deals in commercial real estate, for example. Does that then mean that there isn't a collapse there coming, or is that the pouncing that we're waiting for? It kind of feels like he's not. If you look at kind of the commentary he has, or even his investments, he's still a cyclical investor. He's still a value investor. You mentioned the banking sector. I feel like he's rescued oil and shale as well with his bid in Occidental at a time when nobody wanted to touch it. He kind of doubled down and said, well, actually, this is a business that's really going to take off. And I would say open the doors to a lot of these kind of shale companies being able to access capital markets in a way that they previously hadn't. But maybe if Berkshire isn't able to find certain deals, maybe Goldman is.
Okay, well, let's talk about Goldman Sachs and figure out what is happening. Goldman Sachs has, this is the nice pivot, clinched $1 billion from Mubadala out of the UAE to look for more private credit deals in Asia. The Abu Dhabi Sovereign Wealth Fund and Goldman Sachs Asset Management will invest alongside each other in the Asia-Pacific region. Jenny Serene, our finance, joining us from our finance team now to talk about this. Look, what I find interesting is the private credit has been booming for quite a while in Europe and in the United States, but less so in Asia. Is this basically a kind of, this is the last area where we think we can invest some money?
Yeah, no, I think that's exactly right. So absolutely, this has been, you know, all the rage these past few years, definitely the buzzword of any kind of major Wall Street circle. But Asia has been largely underpenetrated. And so you're seeing a, you know, storied investor like Goldman Sachs Asset Management team up with a sovereign wealth fund that's really looking to kind of juice returns and get exposure here. And we'll see how it goes. I think it'll be interesting to see if they can find the kinds of opportunities that they were able to find all these years in Europe and the US.
And they're focusing, part of it is the focus on India, which is really fascinating given the kind of renewed scrutiny of all the optimism that's coming through from that market across multiple different asset classes.
Yeah.
Talk to us about that part of the thinking for both Goldman and of course, the Abu Dhabis.
Yeah, I mean, I think it's super interesting. So just in general, I think that corridor between Middle East and India is going to really heat up in these next few years. And so I think this is just kind of the latest sign that that, you know, trade and investment corridor is really going to be a key focus for Middle East investors. But yeah, it'll be interesting because this, you know, private credit historically has really done well with middle market companies that kind of have that big growth trajectory and just need this new outside investment to come in. And so, you know, does India have deep enough markets to put this kind of money to work? We'll see. Obviously, it's a huge and growing economy. So, you know, it seems like Goldman and Mubadala have convinced themselves of that, but it'll be interesting to watch.
A huge and growing economy, but to your point, liquidity absolutely matters because isn't that the lesson we've learned from China here and the exodus of funds there? But Jenny, let's continue our tour around the world here. We go into the Middle East, did a little bit of India and China. Let's bring it back to the States, where, of course, the U.S. presidential election, it's underway. A major player, Nikki Haley, of course, losing the funding of the Koch network, $32 million getting lost. What do we make of this?
Yeah, you know, if you look back at when the Koch network actually got behind Haley's campaign, that was actually a really shock move for them. They had never before backed a single candidate in the primaries. And so this was a huge voice of support for her. And the fact that they're now kind of scaling that back and saying, no, you know, instead we're going to focus on key Senate and House races. It's obviously a blow. It comes on the heels of her losing the South Carolina primary, which I think was, you know, not expected at all a few months ago, and now has really just showed that Donald Trump's traction is really gaining steam.
A lot to digest there. Jenny Serene from our finance team, we thank you so much for walking us through, I'm going to say, the billions that have been kind of roaming around the world. Guy, we're talking about kind of Goldman's take, the Buffett take. Where Wall Street's money lands on this election is going to be something we certainly watch next week.
Will they stick with Haley? The Koch network's moving away. Will others on Wall Street continue?
Yeah.
And if she doesn't get the nomination, which it looks like she won't, does she go as a third-party candidate, and where would she take potentially votes from?
Or is she looking at the legal woes of Trump as a potential black swan opening for her, or is she looking at the next presidential campaign in 4 years' time? I mean, how she positions herself?
As everybody's saying, she's the kind of told-you-so candidate.
Yeah, she very well might be, and especially when we look at the momentum, he's out of the picture. But I think the Wall Street money really matters here because she's gotten way more support than Donald Trump has from not just the Koch network, but several others.
And she's been criticized for that.
And she has, but in the absence of it going to Nikki Haley, does it then go to Biden, or does it then go to Trump, or does Wall Street just stand on the sidelines? Who knows?
Koch's talking about the fact that they're looking at the Senate and the House. They're not going to focus on the presidential election. They're going to look elsewhere.
A lot to digest.
We're almost done. You think about the week ahead. So a quiet start to the week. Believe you me, this week is going to warm up as we start to work our way through the data. It's going to be certainly more backloaded. So a quiet start. I think things are going to pick up. Francine is up next. She'll continue the conversation on the Pulse. This is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this. It has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Britain's top antitrust enforcer opens an investigation into 8 house builders to probe potential information sharing here in the UK. Ant Group is said to have outbid Citadel for Credit Suisse's investment bank venture in China. The surprise move will face close scrutiny. And Volodymyr Zelensky says at least 31,000 Ukrainian troops have died since Russia's invasion 2 years ago, while renewing his push for more U.S. military support. Now we'll be speaking to the chief executive of Ukraine's largest private energy company on the state of the country's energy infrastructure. Now let's take a look at the European markets map. There's, of course, a lot of focus on what we heard last week on some of the rallies that we've seen in certain parts of the markets. There is, brace yourself for a pretty busy week on the markets, because there's going to be a very data-rich kind of week, especially the Fed's preferred measure to look at inflation. Now, some of the other things we're watching out for is, of course, UK home builders, and some of the support that we could get from a Fed speaker. So it's going to be a very, very busy week. You can see for the moment these European stocks are kind of holding a pattern, a little bit of pressure maybe on the CAC 40 over in France. Now we're joined by Jackie Bowie, Managing Partner and Head of EMEA at Chatham Financial. Also with us, Bloomberg's Justina Lee. So thank you both for joining us. Justina, let's kick off with you. There's a lot of chatter, of course, about these UK home builders. Like, what do we know so far about the probe that the CMA put in place?
Right. The UK CMA is kind of looking at whether these home builders have shared sensitive information with each other. I mean, they're stressing that they're still at, the initial phase of this cartel probe. But of course, all of this is happening against the backdrop of broader concern over, the housing shortage in the UK. And as part of that, I mean, the authority has also looked into estate management charges and the general kind of poor quality of new homes. And we're seeing kind of in the markets today that a lot of these home builder stocks, they're not all down that much, but they are falling a little bit in trading today.
Yeah, and Jackie, I mean, this has, I guess, huge implications for also the confidence that people have in a lot of these home builders.
Yeah, for sure. And I think obviously we started to see some consolidation in that sector as well. And I know we're going to talk about interest rates quite soon, but they've certainly also been hit by the interest rate market. So there's quite a lot of headwinds for the sector overall.
Justina, overall, I mean, there's a lot of data, and that will kind of keep the markets very busy. I know there's some of the preferred things that the Fed is looking at. Are we now worried? Is it all about inflation, or is it really trying to figure out what the labor market does next?
Yeah, I think inflation is a big one here. I mean, this week we're going to see the core, PCE deflator number, and economists are currently expecting that to have accelerated, which kind of reflects what we've seen in the CPI and PPI numbers. But I think the question here is maybe there's a bit of seasonality in that, and so to what extent is the Fed going to look through that number? But at least from kind of what, the comments from Fed officials that we've heard so far, I mean, it's one clear message, which is that, don't think about imminent rate cuts. And I think it's interesting because obviously the markets have rallied. It's in a way, like, it's a bit circular, like financial conditions have indeed kind of eased, and I think they're definitely worried about that.
I mean, Jackie, last week was, quite a funny week because you felt the economy in the U.S. was also propped up by NVIDIA and Taylor Swift.
Yeah.
Jokes aside, I mean, what will actually give impetus to these equity markets going forward?
Yeah, I mean, I think the markets had obviously priced in a fair amount of rate cuts from the Fed, and that will continue to be the story this year. But, even just in the last few months, those expectations from 6 cuts now down to 4, and that will certainly drive both bond and equity markets. I think there is a concern that this last leg down in inflation might be a little tougher to achieve than maybe the markets were thinking at the end of last year.
Do you agree with that, Justina? Or again, to your very good point on tightening financial conditions, is there just a worry that inflation comes down and then it shoots back up towards the end of the year?
Right, exactly. I mean, on kind of the supply side, I think there's kind of some concern over, what is kind of the war kind of doing to supply chain issues and the kind of the cost there. But I think on the other side, there's sort of a big mystery going on among economists, which is that we're seeing this huge U.S. productivity boom, and kind of that could be the reason why, the economy has kind of kept growing, and then maybe everyone can kind of benefit. You kind of have workers getting higher wages, but kind of companies benefiting at the same time. I think the question here is how sustainable is this U.S. productivity boom, and are we really kind of seeing a reacceleration of the economy almost?
Jackie, what are some of the indicators? So we know that the Fed, likes, for example, the core personal consumption expenditures price index.
Yeah.
It gives you a little bit more, and I think it's a little bit less backward-looking than maybe some of the indicators that the markets look at.
Yeah.
I mean, apart from that, is there anything else that we should really focus on where a year ago maybe it wasn't so much on our radar?
Well, I think they're generally looking at the other main indicators. The labour data is really important for all central banks, and the Fed have indicated that. But, as we've said, the US economy has been so strong, and the labour market is a big reflection of that strength. Consumers are positive, but also cash-rich, which is helping keeping the economy stronger, which is why the market had priced in that those rate cuts would come soon, and there would be plenty of them. So that's really the big question.
Justina, it also feels like the markets have really largely been looking through some of the expectations from extra Chinese stimulus, but we had some, again, worrying or concerning data points from how much local governments were borrowing. How much does China factor into your equation?
I think it's a big one here. I mean, this week we're getting PMI numbers out of China, so that will kind of give you a leading indicator into whether kind of the momentum is picking up again. But yeah, I mean, today we got the headline that there's kind of been this state-related firm that is picking up the tab, so to speak, for a local government financing facility. And I think that kind of is bringing attention once again on these local government debt burdens that might not be kind of that sustainable, especially in some of these poorer regions.
Jackie, what's your take on China?
I think there's a lot of structural things that are undergoing change in China, and what we had relied on before for the growth coming out of China to boost global growth has certainly dissipated. Those structural changes, I think, will take years to work through. Look what's happening in the property market in particular. And I guess how that feeds into then the US market. You know, China are huge holders of US treasuries. So anything that happens structurally in China that changes that position will also impact yields in the US.
Yeah, I mean, we also have two interesting stories. Like, Ant seems to have outbid Citadel Securities for, the joint venture that Credit Suisse used to have.
Yeah.
I don't know what that means in terms of regulation. You look at financials very closely. And then there's also a fund with Mubadala, again, to look for private equity in Asia. Is there going to be a lot of financial movement in that region?
I mean, there's certainly a lot of opportunity in the region as a whole, so not just China, looking out beyond that. And there's a lot of private capital, sovereign wealth, looking to allocate into that region. So they must see the opportunities there for growth.
Yeah.
I think you've got to look at the difference between China and the rest of the region, though, and not bunk them all together as one.
Is there anything else that's on your radar? I know there's always kind of like gold indicators or inflation indicators. We're almost at the end of the earnings season, so I don't know whether that's a sigh of relief, Justina.
Yeah, I think definitely. And I think it's a sigh of relief to investors as well, because it's been a pretty solid earnings season. And I think one of a few features coming out of the season is one, the U.S. kind of is still beating estimates, and that's being really led by the technology stocks rather than a lot of other sectors. And I mean, I was reading JP Morgan's summary, and one thing that really stood out to me was that the gap between kind of US and Europe earnings growth is the highest in a very long time. And of course, that's reflected in the equity market trends we're seeing. But it's kind of interesting because there's always someone trying to say that, European stocks are way better value. But I think if you look at the earnings trends, I mean, that tells you why.
Are European financials better value, Jackie?
Well, certainly if you're looking for some cash yield, European financials are looking pretty good. If you look at everything that came out last week, the European banks are flush with cash. Their net interest margin is extremely wide. They're all doing share buybacks, increasing their dividends. So if you're investing for cash returns, European banks seem to be the place to be.
And this is despite commercial real estate concerns.
Yeah, and we've looked at exposures to commercial real estate from various financials and other lenders. It certainly seems to be more of a concern in the US, particularly with regional banks in the US. And until we see those valuations in real estate reset, it's hard to know where it will land. They've certainly been provisioning for some of those losses, but the question is it enough?
All right, thank you both. Get us started there for the week. Jackie Bowie, a managing partner and head of EMEA Financial, Chatham Financial, and Bloomberg's Justina Lee. Now, coming up, Ant Group has outbid Citadel for Credit Suisse's investment bank venture in China. So we'll dig a little bit deeper into what we know from this exclusive Bloomberg scoop. That's next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
So UBS has some pros and cons to make.
So, Lulu, we also have news of $1 billion private credit deal between Goldman Sachs and Abu Dhabi-based Sovereign Wealth Fund. What more can you tell us about that?
Yeah, lots of stuff happening in the market today. For that deal, while private credit is a crowded trade in the U.S., it's just picking up in Asia. So the deal that Goldman struck is very similar to what the agreement that they made with Immerse. They are looking for more access to deal origination in Asia Pacific, and for a long time, Middle Eastern wealth funds were not interested in the space because the returns were too low. But with the higher interest rates now and funds looking for more stability amidst all this market chaos, private credit trades in Asia are increasingly becoming more interesting, which is why they set up the partnership with Goldman.
Lulu, thank you so much. Lulu Chen there, who's looking, of course, at all things financial in Asia. Now, we're just also getting pictures live from Brussels. Hundreds of tractors are taking over the streets of Brussels. They've returned to the Belgian capital almost a month after the first farmers' protest brought much of the city to a halt. Now, today's protest comes ahead of a meeting of European agricultural ministers, the EU, I guess, trying to quell some of the farmer discontent. Countries led by France have asked the Commission to monitor grain production in Ukraine more closely, as the bloc seems to be pushing to extend the suspension of some of the import duties on the nation's products for another year. That's according to Bloomberg sources. Of course, we'll have a full roundup of everything that's going on in this meeting of agricultural ministers. Now, coming up, Nikki Haley loses a key financial backer after a crushing defeat to Donald Trump in her home state. We'll discuss where the loss leaves the race for the Republican presidential nomination. That's next, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
To U.S. politics now, where a major funder has pulled the plug on Nikki Haley's presidential campaign. The announcement from Americans for Prosperity Action, backed by Charles Koch, comes after a big loss for Nikki Haley in the latest Republican primary. Now, for more on all of this, we're joined by Leslie Vinjamuri, director of the U.S. and the Americas program at Chatham House. We were joking that Leslie is the most popular guest at a dinner party, but I know that's right, Leslie. Also, because people really want to understand what is going on and who will be the next president. So what do you make of what happened in South Carolina?
Well, it's as expected. People predicted that Trump would do very, very well. The polls have been actually remarkably accurate. He's come, a little bit down from where polls predicted him to land in Iowa, New Hampshire, now South Carolina. So just under 60% of the vote. But again, the thing I think to notice here, the headline news is that Nikki Haley is not coming through strong enough to really make a bid for this nomination. But right below that headline is that she's pulling away a very substantial number of primary voters, and that doesn't signal well for how Donald Trump will do going forward. He's also not done especially well with African American voters. With independents aren't looking very favorable towards Trump, and then there's a split in the Republican Party. Nikki Haley has been pulling wealthy Republicans. Certainly, this is what we're seeing in South Carolina, and Donald Trump is pulling those rural voters. And I think when we move to a general, that contest for the rural working class voters is going to continue to inform a lot of what we see between Nikki Haley, between President Biden and Donald Trump. So, as expected, again, as you said, donors are now making their calls. That will accelerate the thinking on Nikki Haley's decision. But she is laying the groundwork for a run in 2028. She's now very visible on the national stage. And as we know, this is a former president who has a lot of time in the courtroom ahead of him. So paving that way for an alternative is a very wise move on her part. So yes, a very significant victory for Trump, but with another story to tell for sure.
Yeah, Leslie, I mean, it was a pretty bruising defeat given it was her home state. But and basically after that, she's been saying, well, Donald Trump cannot win in November. Like, what do the polls show us? If there was an election today, Donald Trump versus Joe Biden, who has it?
Well, it's very close. But again, as we know with the polls, first of all, it's going to come down to a few states because of our electoral system. And secondly, it's not, who likes Donald Trump and who likes Joe Biden. It's how much do they like them? Do they like these two candidates enough to turn out and vote? It's all we hear this and we continue to forget. We sort of turn back to the polls, but it is all about turnout. And there are so many known unknowns. How will young voters feel about President Biden when it comes to October and November? Some of that is linked to the war in the Middle East. Some of that is linked to how he campaigns, how he does on the campaign trail. And on Donald Trump's side, there are a lot of people that are meh about the former president. And that's what we're seeing in the primaries. Can he get people to turn out, and can he get independent voters? And on that count, it's not looking so great for the former president. So I think that, this is a very long road ahead. If the race were today, I'm not sure that I would put money on it. I would probably guess that President Biden would eke through. But this is going to be a difficult several months and a very exciting, in one sense, several months for U.S. politics.
So the really important one is, of course, then Michigan, right? And this is an important state that I think Donald Trump narrowly lost to Joe Biden in 2020. So how long does actually, if it doesn't go well for Nikki Haley, how long can she still stay in the race?
Again, I think Nikki Haley has made it very clear that she will stay in the race through Super Tuesday. The other thing to watch on the Democrat side is that, Gretchen Whitmer has come out for President Biden on the Democrat side, but there's a counter movement to sort of encourage Arab American voters in Michigan to stay home. And that, as we know, when we get to a general election, could have a significant impact on the outcome. The other thing that I haven't mentioned that I think, again, we need to watch, when you look at the breakdown of those supporters of former President Trump, he's really pulling the evangelical vote. This is a very, very significant vote. And that, again, will link up, the passion that those voters feel for Trump, the antipathy that they might feel for President Biden. Some of that will link to, again, the war in the Middle East and how that plays out. Some of that is going to be linked to the politics of the pro-choice or pro-life vote in the U.S. So there are a lot of issues that are going to continue to unfold at the headline level that will influence whether or not these voters, feel the enthusiasm for two candidates that, we hear a lot about the lack of enthusiasm for President Biden. But if you look closely at those numbers, again, Trump isn't pulling as strong as he needs to be confident of a win in November.
But Leslie, again, for Joe Biden, I guess on the Democratic side, is it an age concern? And if it is there anything that the Democrats can do to get back? I mean, he's actually not doing great in the polls given where he is and what he's done for the economy.
That's right. I mean, we know that the age concern has been, top of story for many months now. It sort of got an uptick a few weeks ago for reasons that are well known to all of us. And I think for the campaign and those surrounding him, can they really counter that by making a tough sell on the success that the president has had? Will they be able to persuade young voters in particular? We cannot underestimate the significance of young voters in this election. They mattered last time. They will matter this time, but it's unclear in which direction. And that age factor, I think, really is a significant one. Whether he can demonstrate a degree of resilience, a high degree of energy, but really sell his policies and put, forward that message about he's strong on climate. He's, committed to a number of economic policies that are beneficial to young people. But so far, that message is not coming through, and that could really hurt him.
Leslie, thanks so much. The Vin Jamuri Brief. What a way to get started on this Monday morning. Director of the U.S. and the Americas program at Chatham House. Coming up, we talk Ukraine. This is Bloomberg.
there is no digital without chips. And I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
This is Bloomberg.
Well, Britain's top antitrust enforcer opens an investigation into 8 house builders to probe potential information sharing. And Krug is said to have outbid Citadel for Credit Suisse's investment bank venture in China, but the surprise move will face close scrutiny. And Volodymyr Zelensky says at least 31,000 Ukrainian troops have died since Russia's invasion 2 years ago, while renewing his push for more U.S. military support. Well, welcome to The Pulse, everyone. I'm Francine Lacqua here in London. So Volodymyr Zelensky says 31,000 Ukrainian soldiers have died since Russia's full-scale invasion of the country 2 years ago. There's, of course, a lot that we need to discuss, including what this means going forward. For more, we're now joined by Bloomberg's EMEA News Director, Rosalind Matheson. Ros, thank you so much, as always, for joining us. So, I mean, the comments were heart-wrenching. We try and figure out also militarily. I know it's something that, tactically you look at very closely. But what did you learn over the weekend?
Well, it's interesting to see these comments, obviously, as Russia's war in Ukraine enters its third year. It was a mixture of defiance and a sense, of course, of calling out to the world, we need help and we need it now. There was a message in some of it potentially for a domestic audience. Again, people in Ukraine who've been going through war now for 2 years, slogging through that. Questions around mobilization, about the potential need to bring more soldiers on. Zelensky mentioned for the first time, again in a while, casualty numbers for the Ukrainian military. Certainly a sense there of fatigue. How can we push on? But then that message also out to the rest of the world, which was a timeline quite clearly saying, we need these weapons now. We're running out of time. We need them, not just agreed, but we need them coming into Ukraine because Russia is starting to make advancements on the ground.
So, Rose, is there any sign that U.S. aid could actually be unlocked?
It seems very unlikely to see it come anytime soon. It's just really locked down in that political environment in Washington at the moment. And also we've got the US this week focusing more on domestic affairs, which is the possibility of a government shutdown. As soon as Saturday, they could have some ministries start to shut down. So they're going to be very focused on their own affairs this week. And right now, there's no great momentum in Congress, certainly on the Republican side, to push that through.
Ross, thank you so much. As always, Bloomberg's EMEA News Director, Rosalind Matheson. Now, as the financial aid debate continues for Ukraine, the country's energy infrastructure remains under threat from military attacks. Well, DTEK is Ukraine's largest energy infrastructure developer and private energy supplier. I'm very pleased to be joined here in the studio by the DTEK Chief Executive Officer, Maxim Timchenko. Mr. Timchenko, thank you so much for joining us. Now, Russia has continued to attack some of the energy infrastructure, and that lasted through the winter. Can you update us on what kind of infrastructure has been hit and how much money is needed to reconstruct that?
So we had energy war for at least 2 years with Russia because of massive destruction of our energy infrastructure. But we're here, so we're have enough power in the country, we have enough gas, we have enough coal, we're well prepared for this winter season. But the key success factor for us is air defense systems. And the situation is very fragile now. So we manage not to have blackouts during this winter. We come into the end of this winter and we are quite positive how it will go. But everything can be turned around because of air defense, because of lack of ammunition, because of current situation with military equipment supply.
I think the government has said that they're looking at some kind of physical protection for some of the energy assets. What does that look like to protect your assets?
Of course, we did all this preparation during summertime. So we built concrete blocks, sandbags, so everything was done. But it cannot be good enough if drones or missiles hit directly to transformer or other pieces of equipment. It cannot be protected without air defense systems.
So can you give us also an update on how energy consumption is looking right now? Is it less than it was a year ago?
So it started growing. You know that positive news coming from our economy, that GDP is growing about 5% in 2023. Of course, energy consumption is directly linked to that. That's why for us, it's not only about frontline, it's about economy. And we have to win this economic war as well. And more than 1 year ago, we were discussing green counteroffensive. Yes. And I can proudly say that during this wartime, we managed to build new wind farm. Now we're in development stage of new projects, wind farms, utility battery storage, grid modernization. So basically, we brought here to London and to Japan last week projects for the value of $10 billion.
No, but this would be financed. So is this you also issuing Eurobonds to pay for it? I know there was a question of the central bank asked, for example, you to be able some of your debt in foreign reserves, which I think the IMF was not 100% fully behind. How do you raise $10 billion?
Yeah, so my point is that today we have companies ready to deliver. We have knowledge, we have experience building new projects during the war. But the key problem for us is access to capital. Of course, we cannot get commercial funding. That's why any funds coming to Ukraine should be backed by foreign governments. And today, what is important for us is to continue serving our current debt, Eurobonds. And one of the issues we have now with the National Bank of Ukraine is buying foreign currency to pay our coupons and repayment of these bonds. And that should be resolved. And we hope that...
So you're in full support of this, of course?
Of course. Yes, we do that. And we hope that IFIs will be more active working with the private sector. Today, as I said, to win economic war, private sector should be one of the driving force for that.
So you talked about green energy, and this is why you were in Japan and here in London to, I guess, speak to investors. What does the energy complex, including green energy, look like in Ukraine in 3-5 years from now?
So today, as you know, more than 56% of our power produced by nuclear power station, which also is seen as a clean energy. And only about 10% is renewables, wind and solar. So our position is that Ukraine has enormous potential in development these technologies, solar, wind, battery storage. As I said, we developed new projects. By end of this year, we'll have about 1,000 megawatt of capacity new projects, which will, with a budget of more than 1.5 billion. So these are the projects we want to bring here, and we want to convince investors that Ukraine cannot be seen as a war zone country. Of course, we have on front line, but again, it's the best way for us to lead by example. So we managed to build this, invested 200 million. Now we're at final stage of financial closing, another project for 150 million euro investment for wind. And this is good examples for investors coming to Ukraine, at least start developing new...
Mr. Timchenko, of course the risks are higher because you're always a target, right, as you said, of drones. So does it, again, when you I also want to ask you how much of percentage you still have of coal usage. But when you speak to investors, do they worry about some of the targets actually being attacked, or their worries about funding and just where the war goes?
Of course, both. So talking about physical destruction, of course, coal-fired power station is not comparable with wind, so much more resilient. And that's already we had the experience that if they hit one turbine, all the rest of wind farms still operational. So of course we need risk coverage for that, and political risk and war risk. That's one topic for investors. The other one is how to execute during the wartime. So in our case, we get all equipment delivered to the border of Ukraine, and they will take full responsibility and ownership of this and bring to the site and erect turbines. So we know how to do that. But I am not asking investors to come today and deploy hundreds of millions. Spend 18 months for development. Get understanding of Ukraine, all this potential. Take into account that Ukrainian power grid is connected to European. So this wind and solar farms can be built in Ukraine to export power, green power, back to European Union. And that's basically the point of President Zelensky, that Ukraine can become green energy hub for Europe.
But this would be the day after the war stops. Or are you thinking of this now?
Development should start now, so that investors can get this first move advantage.
How long are you expecting the war to last?
You know, it's difficult to answer this question for any of Ukrainians. In our case, we know that we are in Ukraine, we in charge of energy security of Ukraine, and we do everything possible and impossible so that we bring it to the victory.
And are you positive about the capital funding, about investors listening to what you need and being prepared to put money?
Investors open, they listen to us, but probably we need to start actions.
Maxim Timchenko, thank you so much for joining us today. That was the Chief Executive Officer of DTEK, Ukraine's largest private energy supplier. Coming up, more of our interview with one of the UK's richest men, the INEOS chairman, Jim Ratcliffe. We discuss EVs, and of course, we also discuss football and his new stake in Manchester United. That's coming up shortly, and this is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Well, China's BYD has debuted its most expensive car, the fully electric supercars, pitted against some of the gas-guzzling options from luxury rivals such as Ferrari and Lamborghini. The price tag just over $230,000. Well, joining us now is Bloomberg's Danny Lee. Danny, this is quite exciting. It's a nice-looking car. Why has BYD got Ferrari and Lamborghini in its sights?
Yeah, it's managed to conquer the mass market, particularly in China. It's looking to go around the world, but it's now looking at more expensive luxury options for customers, particularly because these are high-margin, and highly profitable. And so by pushing into this segment where in China in particular, there's not really a lot of competition for these really expensive EVs, it's looking to make a name for itself. And particularly when you look at the Yangwang U9 stats of 0 to 100 kilometers an hour in 2.36 seconds, top speed of 310 kilometers an hour, it really puts someone like Ferrari or even Lamborghini right very much in the shade, and where they're still developing their own concepts and products, particularly in the fully electric space. So yeah, BYD, first blood to them.
So BYD, again, I guess the question is, would you buy a BYD supercar rather than a Ferrari?
I think in China, they've clearly put a big statement out, and especially in where China, the market for luxury is really a big one, particularly for European brands in particular. So this is one where we'll have to wait and see just how much of a pickup they see in pre-order sales and in particular sales they can get across the line. But this will be really helpful for them. High margin, high volume, highly profitable kind of vehicles, particularly at a time when China's going through a real autos price war.
Yeah. So Danny, very quickly, I mean, is this good for basically the more affordable EVs, or is it really that they're trying to make money of these supercars?
I think it's good news on both fronts, but particularly for these affordable EVs, BYD then has the confidence to go even lower on some of its more affordable vehicles. And we have seen that already in China, where it's looking to cut its prices even more. But we'll have to see in somewhere like Europe, where it's expanding at the moment, just how willing it is to compete more effectively and cut its prices to raise sales.
Great, thank you so much, Danny Lee, there with the very latest, of course, on this pretty exciting launch from BYD. Now, in another vehicle debut, Ineos Automotive has revealed its latest model line on Friday, the Fusilier. I spoke with Jim Ratcliffe, the chairman of Ineos, and asked him whether he believes in EVs or whether the issue is actually being pushed by regulation for government.
If you're in the automotive world, then you've got a responsibility to try and improve the world's sort of carbon footprint for the automotive fleet. So the electric vehicle definitely makes a huge contribution to that.
Yeah.
So.
Are you in it for the long haul? How much money are you prepared to commit to this?
Yes, I think you're either, you can't be half in. You have to be fully in, really. So we are fully in. It's a proper vehicle, and the volumes will be quite high. So. Yes, we're definitely in it for the long term.
I mean, it's a beautiful vehicle. So the proposition today...
Do you think so?
I think so. Is basically either fully renewables, battery,
correct.
or actually you can do a little bit of both. Are you confident, again, that governments will give you the time to adapt more?
Well, I think governments are still sort of feeling their way forward. I think the important thing is that the trajectory is the correct one. In other words, that we're constantly reducing carbon emissions. So, but in terms of navigating that route, I don't think anybody's clear what all the solutions will be today, because there are various solutions. Obviously, there's electric, there's hydrogen, there are hybrids, there's range extenders and things like that. So I think where we'll go and what we believe in is that the electric is definitely an offering which we'll make, and it's very good in certain circumstances, but we'll also include a range extender in some of the vehicles where you've got the fallback of being able to fill it up at a fuel station.
It's a big week also for United. You've been wanting this for a while.
Yes, quite a while. Yes.
I think you said that this is going to be a hard fix. What does that mean?
Well, it just means it's not a light switch. It's not going to change overnight. So it's you have to, we've said it a couple of times, you have to walk to the right solution, not run. I mean, quite often in football, people just get the checkbook out and they think it's all going to be solved in the summer transfer window. That's not, I don't think in the modern world, that's proven many, many times to not end well. So, a lot of this is about taking a step back and looking at the organisation, looking at the people in the organisation, looking at the environment. At the end of the day, you're just putting 11 players on a football field and you want to win a football game. But it's a very complex organisation now that gets you to the point where you found a winning formula. So that will take us 2 or 3 seasons to get there.
But do you think you can compete with current finances?
With our current fund?
Yeah.
Yeah, I mean, Manchester United is one of the biggest clubs in the world. So, and you know, whether you like it or not, that obviously influences the quality of football you play, because you can obviously afford better footballers. So, no, I think, in my view, Manchester United, in terms of its brand, is the biggest club in the world. It's not been successful on the field for the last 10 years, as it probably ought to be, but it's got a fabulous history, and if we can get it back to where it should be, which I believe we will, then you know, it's going to be a very, very big enterprise.
Would you take it private?
No, I don't. All I'm focused on is improving performance on the field. I don't really get distracted by those types of things. It's just about winning football matches. That's, you know, what we get our kicks out of, so to speak.
So this, I guess, is what you love. Do you have confidence in the manager?
Well, it's not. This is not about the match. If you look at Manchester United for the last 11 years, it's not done terribly. None of the managers have done terribly well. There's been a whole series of managers, and you know, there've been some really good coaches that have come to Manchester United. So, you know, the conclusion from that has to be that the sort of the environment for the coach has not been a successful one, because none of them have been successful. And you know, Eric's working in that same environment. So, our focus is on how do we change that environment and the structure that, you know, provides the coach the environment in which he can be successful.
So can I understand from that he has your support? And what are you talking about? Is it culture? Like, what needs to change?
Well, it's you know, it's an elite sport. So you need an environment which is driven. It's going to be competitive. It's quite intense. You know, because you're an elite sportsman, you need to be in a driven environment. But equally, you need some support, you need some warmth, and they haven't. And we need the people with the right skill sets in the right boxes. So it's a bit of a combination.
Would you bring Mason Greenwood back?
No, I don't want to talk about individuals.
Because it's too soon, or because he's controversial?
Because I don't want to talk about individuals. I don't think it's appropriate for me to talk about individuals.
Okay, you've asked for public finances or public money to help with new stadium.
No, I haven't. I haven't asked for public finance. What we've said is that there is another option with Old Trafford. We can go down our road, which is where we're going, to refurbish the existing Old Trafford, which will give us a great facility of 80 or 90,000, and will cost about £1 billion. But there is another scenario which could maybe act as a catalyst to regenerate that part of Manchester, which is a little bit neglected and run down in places. It's Trafford Park, which was the heart of the Industrial Revolution. You know, it was the first industrial park in the world. But today is not all of it's in great shape. So it could act as a catalyst for regeneration. And there's been a lot of talk in government about levelling up and investing money in the north to raise, to bring some big projects to the north. And there is an argument also that a lot of our football DNA in the UK is in the northwest. Those three teams in the northwest have won the Champions League 10 times, and London's won it 2 times. So why shouldn't there be a Wembley of the North? So if we did build a much more ambitious project with a brand new stadium, then that would be very fitting for England to play for the FA Cup final, for the Champions League final, that sort of thing, which would be great for the north of England, so they don't always have to schlep down to London to watch a football match.
That was Jim Ratcliffe, chairman of INEOS, and of course we'll have plenty more from that interview throughout the day. We're also talking trade. That's coming up next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he had.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurise the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
The agreement blocks tariffs on digital transactions, wherever they occur in the world. I
own a bank that shows me what I spend instantly.
We're Monzo. Give us a go.
See? I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo. As on March 31st. They've re-upped it every 2 years since 1998, and some countries want to make it permanent. But experts think Indonesia, India, and South Africa could oppose it entirely, and it would only take to scupper the deal.
Okay. Today, I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
I'm a conservative, but I'm not in a bad mood about it. Fellow
Bad mood
governors.
about being conservative. That's because you feel like populism has taken control of your party.
And Joe Matthew.
What is it about race that bothers you about the new chairman of the Joint Chiefs?
Our military is becoming so political that we're going to go south when it comes to readiness.
Alongside Kaylee
The
Lyons.
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That
it.
really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg. Context changes everything. Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Donald Trump continues his trek toward the Republican Party nomination, defeating Nikki Haley in her home state.
Berkshire Hathaway is sitting on a record cash pile. Buffett says he's struggling to find deals capable of eye-popping returns.
And Wall Street's winning streak faces a test as investors gear up for a flood of economic data this week. Yep, it's that toxic combination, auctions, Fed speak, and as well as that PCE. What more could you possibly want to move the bond market and the equity market? Have a look at this. Down 7 basis points on the 10-year government bonds, yes, at the close of business on Friday. Down we go a little bit further. Do we have the appetite to pick up 2s and 5s and 7s? There's more auctions coming down the pike this week. Of course, if last week was anything to go by, it didn't exactly shape, but tips and 30-year paper, it wasn't a blowout demand. So let's see. We'll test the nerve of duration. We'll ask Mark Haefele in just a moment whether he is enticed by duration. I think he is at around these levels. More of that in just a moment. The crescendo of the week will be the PCE, and will we trade back above the 6-month level, above the 2%? That's the worry for the bond market, really. Later in the week, you've got Goolsby, you've got Waller, you've got Daly, all playing in there. Now, the dollar, you may well ask yourself, what is it that can knock the dollar? Well, it trembled last week, the first weekly loss of 2024. If there is more stability in the rest of the world, what does that do to the dollar narrative? Oil down by 0.4%, down 2.7% on Friday. The USA exporting 4.81 million barrels. You know, that is a big headwind for the OPEC Plus nations with their newly minted cuts. Danny, that's State of Play as we start Monday morning. All to play for PCE.
I thought if we got through the risk event of NVIDIA, we could just hang out. We could just buy stocks and we'd all be safe. You're telling me there's more to worry about this week?
Well, you've got the stock risk. I've got the cross-asset risk. I can't have everything.
No, but it's fair. What you said, Manus, is also a risk for this equity market. I mean, PCE on Thursday is going to be a big deal. Oh, not to mention potentially another government, half of the government shutdown happening on Friday. S&P 500 futures take a breather after the gains of last week. At one point, we were trading at 5,100 on Friday. We've come down from that level. Still a remarkable week. Small caps, though, not playing along. Russell 2000 futures, those are down 0.5%. They also fell last week in the NVIDIA-inspired gains. We also saw hedge funds selling at the most record pace since 7 months ago. Cathie Wood's also selling her TSMC stake in the frenzy of NVIDIA. So everyone is taking, not everyone, but a lot of people are taking profits after yesterday. Meanwhile, Nikkei, another record, up about 1/3%, helped by one tech stocks and two, Warren Buffett in the Berkshire Hathaway's earnings over the weekend and his shareholder letter saying that he's buying more of Japan. He likes the corporate governance. So Manus, how much further does this equity market have to go? We have a little bit of catch up happening because again, these are remarkable gains and now we're ahead of a lot of where estimates are. Now, our next guest wrote about the year ahead, revising his forecast, saying we've revised to 5,200 from 5,000 on the back of stronger than expected earnings. If incoming data further supports an Goldilocks outcome for growth, inflation, and rates, an upside scenario could see us end the year at 5,500. Manus, that's of course Mark Haefele saying that.
Yeah, I mean, that's another 10% to go. Other people have been a little bit more hesitant in their calls. We saw 5,100, 5,200 last week. But what is the magic sauce? AI. You've got Cathie Wood selling into this magnificent rally and taking some profit on some of her chip positions. Now, that can be logical at some level, but of course our next guest warns slightly against that. Bank of America says, I love this, the AI is the economic growth, it's the magic sauce for stocks. That's what we like. So don't be fearful, just get in there and stick and stay long.
That's a really great meme. Is it Olympus that holds the globe over his head? And it was like the globe was the world economy and Olympus was NVIDIA? This idea that that's...
But it's true.
No, it is. This idea that that's what's supporting us. Okay, let's get to Mark. I'm pleased to say we have him now. Mark Haefele, the CIO of UBS Global Wealth Management. Mark, if we get to 5,200 and then to 5,500, how broad is that rally and how much of it is just AI stocks?
Well, I think it would have to broaden out a little bit because to get to that upside scenario, we're going to need to see inflation continue to fall so that the Fed can cut rates. So I think that's part of the story. On the other hand, the reason that we upgraded the base case is because the earnings came through a little stronger than we expected. And, you know, the U.S. economy in particular has just really been holding strong despite the rate cuts so far, or the rate hikes.
Mark, good morning to you. I love the way you present where we are at the moment. It's a bull market that brings a mixture of optimism, excitement, exuberance. That's Bloomberg Brief. Yet there's a sense of unease. That's every day when we put this show together that it could go wrong. Can often override the glee. So this is juxtaposition between what? Glee and unease, which is fear to greed. So right now, is it more important to be steady, not necessarily greedy, but steady and participate at all times?
Well, I think what's important for people to realize is, you know, we have a real insight into the private investors around the world. And the first thing I'll say is that from what we see, they're overweight in cash. And then secondly, many of our investors outside of the United States remain underweight to the United States. And so, you know, our main message is that this is a great time to get your portfolios into balance with your strategic and tactical asset allocations. Get your allocations to equities right. They should include U.S. large cap. And it's also a good time for bonds because we do see those interest rates falling this year.
By the way, I just want to say for the record, our producer just corrected me. It's Atlas that holds the globe, not Olympus. Tomato, honestly. Mark, someone else that's holding a lot of cash Warren Buffett. He talked about it over the weekend, and in his letter to shareholders, he said that markets now exhibit far more casino-like behavior than they did when I was young. The casino now resides in many homes and daily tempts the occupants. This is not unfamiliar to what we heard during COVID with the meme trading frenzy. But we also heard from David Einhorn earlier this month also saying that the market is fundamentally broken because of price-insensitive passive investors. The criticisms are still there, Mark, that something is broken with this market. Would you agree with them?
Well, I've known David for over 20 years, and I can say the market is a lot different from, the classic long-short environment where he became so amazingly famous and so successful. But, that's just one side of it. I think what's interesting today is that, for many investors, if they can take that longer-term view, they can kind of get beyond the kind of day-to-day struggles that professional managers have. And I think there is this risk upside case where, people look out and they say, we think AI revenues are going to grow 70% a year until 2027. And so, what if all that kind of projected return gets pulled forward to this year, and then you can have a lot more upside. So I do think there are kind of more risk cases, both on the upside and the downside today, that investors have to deal with.
And I think it's interesting. You put that number in terms of the AI revenue growth, 70% through 2027. So that should give some confidence to the growth trajectory. Mark, you talked about the risk of home bias, the risk of being overweight cash. You like bonds at around 430 on an average basis, but I'm curious to know, you still say we're overweight cash. Those investors, I'm not part of your client list yet. They are going to move out of cash, and I'm curious to know how you're encouraging them to do that, whether it is into duration, into credit, because I look at long-dated credit on the corporate bond index, and the gains there are 4 times greater the shorter end. So where do you want to redeploy? And are you actively encouraging them, come out of the CDs, come out now?
Yeah, that's right. I mean, bonds over time usually, almost always, have better returns than cash. And we're saying kind of while the yields are high, before the Fed starts cutting rates, before others start cutting rates, get that exposure to bonds. And we like quality bonds, government bonds, investment grade bonds, but look around the 5-year duration, because, there are these longer term concerns about funding deficits and the potential for inflation to flare up again. And we find the best risk reward is around that 5-year mark.
I mean, Mark, what Manus was also kind of talking about there, and we've discussed before, is the frenzy in credit. I wrote down a few statistics from the past week. Well, this week, blue chip companies are set to sell another $35 billion of bonds. Last week, they just sold the most in nearly 2 years. Even with all that issuance, high-grade spreads are extremely tight, the tightest since November 2021. New concessions have fallen close to zero. How do you make sense of all that?
Well, I think that's, the tightness extends, down the quality ladder. So that's why I think, to be sensitive to that, we are more on the quality side. But yeah, it's all about the Fed, and it's all about anticipating that this inflation picture becomes more benign, so that our investors can take advantage of that by locking in the yields now.
Okay, well, let's hope that we don't all suffer from that home bias as you talk about this morning. Great calls, Mark. Let's see how it plays out. Mark Haefele there from UBS with his global perspective, himself and the team. Other stories trending on your Bloomberg terminal this morning. Britain's top antitrust enforcer has opened an investigation into 8 house builders. The investigation centers on concerns they may have exchanged competitively sensitive information, which could be influencing the build-out of sites, the prices of new homes. An initial information gathering stage will take place through December.
Disney and Reliance Industries are said to have signed a binding pact to merge their media operations in India. Sources say Reliance and its affiliates are expected to own at least 61% in the new entity, with Disney holding the rest. The merged business is set to make a formidable media giant in one of the world's fastest-growing entertainment markets.
KKR is said to be nearing a deal worth about $4 billion to buy a software business from Broadcom. Sources say the deal could be announced as soon as today. Broadcom is selling its end-user computer unit, which it inherited through the acquisition of VMware. Now, the business provides software that enables users to access desktops and applications remotely.
Coming up, Nikki Haley's home state advantage didn't help her this weekend. Trump defeats her again. Can she keep her promise to stay in until Super Tuesday? That's next here on Bloomberg Brief.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
That is really something. This was a little sooner than we anticipated. It was an even bigger win than we anticipated.
I'm not giving up this fight when a majority of Americans disapprove of both Donald Trump and Joe Biden.
That was the GOP presidential candidates, Donald Trump and Nikki Haley, after the results came in. Amory Hordan was up late and up early. How are you? Good to see you.
Good to see you. Thanks for having me.
So here we are. Nikki Haley comes in at 39.5% on the docket. It's not enough, but she's still going. Why is she continuing on through Super Tuesday? What's the underlying reason?
So what analysts will look at when they look at a Nikki Haley campaign is her setting herself up for the future. She's a decade younger, or generation younger than former President Donald Trump. She could set herself up for 2028 nicely. At the same time, she is still bringing in mega donors to fund her. So she can use this war chest in the future. Now, we do know the Koch brothers Political Action Committee has put out a statement over the weekend, first reported by Politico, saying they are going to ratchet back that funding to her because they don't see a path forward for her, and they're going to focus on some Senate and congressional districts that they think they can win in some of those races. But she's making a point within the Republican Party, and I think it's an important point. If you look at the Fox voter analysis, 6 in 10 Haley voters had to say this: they would not support Trump in the general election. So while yes, Trump dominated, he only still got 60% of the vote, and he's running as an incumbent. So I think what this race also showed is not just the path that Trump is going to be the nominee, but also how much harder the climb is going to be for the former president in a general election.
How much harder are things for Nikki Haley if she doesn't have the backing of the Koch brothers? I understand the idea of what you're saying is that it's about the look forward. It's not necessarily about the presidential election, but does that complicate efforts to stick around until Super Tuesday?
Well, I think it complicates her efforts in terms of, I don't think till Super Tuesday, but potentially middle to the end of March. And likely you could see Trump bring in the number of delegates he's going to need to pass the threshold by the middle to the end of March, and then we'd be full throttle on the longest general election campaign in American history. That could potentially happen before April. But I think it's an important symbolic moment for Nikki Haley, because what really has been surrounding her for weeks and months is the fact that she's able to bring in these top-notch, highly lucrative, conservative capital. And what happens now when you start to hear murmurs that people are going to start to wind down because they just don't see the path forward, even though they like her as a candidate.
Then they flick forward to who's 2028. By the way, I just came back from Miami, and I can tell you who was on the stage: Maria Bartiromo and Mike Pompeo. I'm just putting it out there as a thought process for 2020.
Well, everyone thought he was going to run, so.
Well, you listened to him on the stage last week, and it was pretty darned impressive. Anyway, I'm not supposed to go there. I'm supposed to go somewhere else. Let's talk, but that's the beauty of 5:17 a.m. in the morning. We got to talk about the emergency aid to Ukraine. I mean, it's been in limbo for months. And Biden's top national security aide is urging Congress to move forward. He spoke to Meet the Press this weekend.
Ukraine can go further in retaking territory that Russia has occupied, ensuring Russia fails and ensuring Ukraine prevails. But it can only do so if it has the tools that it needs. And that is why the United States needs to deliver the aid package that passed on a massive bipartisan vote in the Senate. The House needs to step up and pass that bill.
I mean, that's Jake Sullivan. We're in this intractable sort of showdown over aid. He says the U.S. needs to keep chipping away at Russia's resilient economy. I mean, there's a lot of mud in the air thrown around the price cap, around what the sanctions are. Are they really that strong? So give us your interpretation of Sullivan's comments.
Well, the sanctions, I think, announced on Friday were largely symbolic. I think, one, you have to remember, on one hand, this is an economy that a lot of sanctions have been levied on it, so there wasn't a ton the United States can pull from, but largely still maintained intact and isolated is Russian metals that they have not gone after. The price cap, though, you know, Deputy Treasury Secretary Wally Adeyemo said to us that Alexander Novak, the energy czar basically of Russia, talked about how it has been difficult. Russia's still able to make money from exporting commodities. They've basically replaced India with Europe. So, yes, sanctions are maybe hurting Russian economy, but they are not bringing the economy to a halt. And that's when Jake Sullivan comes in and says, we also need to make sure we're sending weapons to Ukraine. That is what President Zelensky wanted to say this weekend on the anniversary of Putin's invasion of Ukraine. We need more weapons. The issue is right now, politically, the House is not ready to take on that vote. And that's one issue the House will be dealing with when they get back this week. There's also a potential government shutdown towards the end of the week.
And on that, I know Schumer wrote over the weekend, we hope to have legislation ready this weekend, but it's clear that the House Republicans need more time to sort themselves out. Will they need more time past this weekend, I guess, Anne-Marie?
Well, potentially. You have to remember there's two shutdown dates, March 1st and March 8th. So maybe we see a partial shutdown on March 1st, and then they're able to, quote, sort themselves out by March 8th. The key meeting this week is going to be tomorrow. President Biden has the four top legislative leaders, Schumer, Hakeem Jeffries, McConnell, and Speaker Johnson coming to the White House. I think after that meeting, we can...
Lastminute.com, isn't it?
Well, welcome to America. Lastminute.com for debt ceiling negotiations, lastminute.com for, you know, fiscal negotiations. This is how it gets done. And I think we can read the tea leaves of what happens when they come outside the Oval Office and talk to the cameras and see if we're any closer to any sort of these deals getting done.
Yeah, I'm not saying Irish or British politics are any better than American politics, so just, you know,
more quaint maybe. More quaint British and Irish politics.
Brexit politics quaint.
Okay, maybe not Brexit.
Good morning, America. Irish politics has got, well, we've got vintage.
It's true. Anne-Marie, thanks so much for joining us. We'll let you go. We know she has to go prepare for surveillance. You, of course, can catch her in about 40 minutes' time there. All right, today's guest on their program includes Lindsay Piegza of Stifel, Michael Schall of Market Field, and Jim Bianco of Bianco Research. Okay, coming up, BYD unveils a supercar it hopes will compete with Ferrari and Lamborghini. We're going to discuss that next. This is Bloomberg.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally. We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
It's Bloomberg Brief with Danny Berger and Manus Cranny in New York. Manus, there's a new supercar out there for us to buy.
Vroom, vroom.
It's BYD's new car. It's called the Yangwang U9, $233,000. And here's the thing. It's an EV, and it goes 0 to 60 in under 2.5 seconds. So this thing is fast. And yeah, it's going to rival the Lamborghinis, the Ferraris of the world.
Well, you know, it's going to be made for in China.
Yes,
so in terms of who they're actually competing, so you're not going to be able to buy it just yet. But who are they going to compete against? It's going to be really against the Toyotas of this world and the Nissans of this world. $233,000, 450 cents. So how much is your average Ferrari? And it probably kicks off at around that price tag. But of course, you know, it's a question of how seriously can BYD, they've trumped Tesla in the electric vehicle space, and the question is, how much of the A game can they bring to the Ferrari? You know, how much can they nip at those heels?
Yeah, one of the things I love about this, I was looking up videos, and usually when one of these supercars is released, they just run it around a racetrack to say, look how fast it is. BYD instead released a video of the car dancing. It was kind of moving back and forth, and then took one of the wheels off of it and showed you could still drive the car with just 3 wheels on it.
I don't know necessarily that's what Ferrari would be putting forward as being the
three-wheel drive.
The three-wheel
exactly.
Ferrari. There you go.
If someone gave it to me, I'd drive it.
Listen, I'd be very happy if somebody wants to give me a Ferrari. I mean, driving around New York in a Ferrari reminds me...
Oh, that's a bad idea.
That's like driving around southwest London in a Ferrari. There's a few people out there. You know who you are. You tend to push everybody else off the road in southwest London. Let's have a look at the S&P 500 for you. Another record this week? Possible, but we're dipping this morning. Good morning.
Part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly, we want to be there for her, but it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back to Bloomberg Brief. I'm Menace Crenny in New York.
And I'm Danny Berger. Here's what you need to know.
Donald Trump continues his track toward the Republican Party nomination by defeating Nikki Haley in her home state.
Berkshire Hathaway is sitting on a record cash pile. Buffett says he's struggling to find deals capable of eye-popping returns.
And Wall Street's winning streak faces a test as investors gear up for a flood of economic data this week.
Mark Hayfley was talking about people sitting on cash. But Warren Buffett, the man himself, the Oracle of Omaha, is sitting on so much cash. And the question this week will be, will people have even more cash? Do you want to take profit after NVIDIA?
Well, Buffett is warning, of course, he's sitting on that amount of cash because he can't find the deals to do to warrant coming out of cash. And therefore, that's going to challenge eye-popping returns.
I'll tell you one thing he is buying. It is Japan. And let me show you what the Nikkei did today. That's what you call a segue, Manus. The Nikkei closing at another record high. Is as if I need to teach Manus how to do that. I learned from the man himself. Anyway, so the Nikkei closing at a record high, thanks to tech, thanks to Warren Buffett's kind words about businesses in Japan. Meanwhile, we're taking a breather from the record highs. We did hit 5,100 on Friday. We came back from that level, but we're pretty close in this futures market to that. But people are now taking profit. Hedge funds, they got out of tech last week from the fastest pace in 7 months, according to Goldman Sachs data. Meanwhile, Cathie Wood also taking profit on TSMC, which also rallied with NVIDIA. NVIDIA is one of the top customers for TSMC. Russell 2000 futures, man, as my beloved small caps, the pain continues. They underperformed this morning, down 0.4%. And as the market was having a party last week, Manis, Russell 2000 was down last week.
Go small caps.
Go small caps.
Go small caps. I mean, Mark Hayfley warned that you don't want to be left out of this next leg higher. AI revenue, probably a growth of 70%. Now, when it comes to the bond markets, Hayfley and the UBS wealth management team also quite like duration at this kind of level on sovereigns and in terms of corporates as well. 424 is where we are. We've got a momentum this week in the bond market. You've got a host of Fed speak through to the end of the week with Goolsbee, Waller, and Williams. But of course, you have got quite a chunky level of auction coming in 2s and 5s and 7s. So let's see whether the market can absorb those quite easily. The demand last week on tips and 30 years was a little bit of a wobble. Of course, we'll build up to Thursday to the PCE, looking for plus 0.4%, so a little bit of a spike higher. That could be injurious to the bond narrative. The dollar is down. We'll talk to Jane Foley in just a moment. We had our first weekly loss last week of 2024. So we broke a 7-week rally. Does Jane think that that is idiosyncratic or an opportunity to buy your dollar again? And oil is down by 0.4%. Go USA. Not stocks, but in terms of oil production, 4.81 million barrels. That is up by 1 million barrels from January. This is the USA's contingent putting a cap on the oil market at the moment. Danny.
I know this week is a big week between all the Fed speak, between PCE, between a possible government shutdown, but I quite liked what Mark said about now being the time to pause and look at your asset allocation, because there's so many people out there who are very overweight cash, as we were talking about, and international investors who are very underweight the U.S. So he says now is the time to take stock, especially as we've had these huge technology changes powering the rally.
Well, this is about home buyers. Typically, those people outside the United States of America, international investors, are perhaps underweight. And if you look at the size and the scale of the U.S. in global equity baskets, it's over 60% of the allocation. So it's about your home buyers. If you're in Europe, if you're in Japan, your proclivity is to be more exposed at home relative to here.
Yeah, well, hey, maybe if you go into the U.S., it can mean another dollar leg higher.
Another dollar leg higher. Well, we put that very question to our next guest. The dollar is near a 2-decade high, recently gaining strength. Our next guest writes this: we see scope for a more broad-based dollar strength over the spring as the market continues to recalibrate the pace and order of policy moves in G10. Our guest this morning is, of course, Jane Foley, head of FX at Rabobank. So, Jane, your thesis is that there's optimism over the Fed cuts, and that is out of kilter. In other words, the optimism for multi-cuts in the U.S. is out of kilter with the rest of the world. So just put that in context, because to a certain extent, the rates market has been brought back quite aggressively from assuming 150 basis points of cuts to around 80 basis points of cuts, which then beggars the question, is the dollar going to face headwinds?
Well, it does indeed, unless, of course, the trend that we've been seeing since the start of the year continues. So since the start of the year, I think perhaps the overwhelming theme in the FX markets has been this paring back of optimism about Fed interest rate cuts. But, of course, there could potentially be further to go. Last week, of course, we had Larry Summers talking about the possibility that the next move may even be a hike. Now, most people don't believe that, but there are significant risks that inflation will remain stickier for longer. The labour market, yes, it's off its tightest levels, but it's still pretty tight. And of course, if we do have a Trump government next year, well, what about those tariffs? And that they could certainly add a little bit onto US inflation over the medium term too. So certain headwinds that suggest that US rates could also remain a little bit stickier. And then, of course, if we go and look at the other G10 economies, well, we see a lot more weakness in terms of GDP. So, for instance, New Zealand this week. Now, the market no longer really expects that they will hike rates, but there is a small percentage view that perhaps they could. And yet, you had a negative GDP print in the third quarter for New Zealand. You've got Australia. Right. No one's expecting a hike maybe until November. The UK maybe September. A lot further out in these weaker economies.
Barclays' Themos Fiatakis had this really interesting note, Jane, arguing for dollar strength, but not necessarily looking at rates, saying that the American economy is one that favors the domestic economy, whereas everywhere else, especially places like Europe, favor globalization. They run on that idea. And as the world is changing, as we're pulling back from that, America stands to benefit with things like energy independence and the Inflation Reduction Act. Another example, supporting the domestic economy. Is the dollar strength from here on out, with a changing paradigm of a global economy, maybe more structural than we realize?
I think that's really part of the argument here, and I think that is very much highlighted by the weaknesses, the headwinds that Germany has been facing. So Germany, for instance, became very reliant on cheap Russian energy. It had a lot of ties with China. China's economy, of course, has been disappointing over the last couple of years, and not only that, of course, China is really pushing back into Germany's space, if you like, with China being on the front foot with respect to electric vehicle production. So Germany is a far more, or Europe in its entirety, a far more open economy. The US, relatively speaking, is quite closed. As you say, it's got energy reliance, it's got a lot of food reliance as well. That's another factor compared with Europe. And I think given the geopolitical issues, given this changing climate that we have with geopolitics, I think the US is certainly very much in favor, given that relatively closed, relatively self-dependent type of economy.
Yeah, John Arthur's piece this morning, dollar strength is looking like the new normal. The US currency benefits from America First economy, on rates, on stocks, and even on Trump uncertainty. I mean, we can come back, we're going to come back to the dollar time and time again. I was looking at the euro, and I was looking at some of the data. The euro is on the longest winning streak since July. Services, Jane, surprisingly at an 8-month high. I say surprisingly, it's just it's been such a battered, and we've abused it with names like stagnation and the sick man of Europe in Germany. But that services number, what does that do for the ECB? It's the first time that it has not contracted since July of last year.
Well, actually, you know, if you look at some of the economies within Europe, so for instance, if you look at Spain or Italy, last year, you know, the services, the tourism side, say, was a really positive side. It was Germany where the manufacturing sector was so much bigger that you really saw that weakness. And I think you can really look at that because globally last year, you know, services was doing much better than manufacturing just about everywhere. So Germany's weakness was perhaps the one that we were really focused on, but there were signs of strength elsewhere. Now, of course, there is some optimism that the Eurozone may be through the worst, that this year is going to be better. But of course, you know, just about a week ago, we had the German government revising lower its forecast for German growth. I think it's just 0.2% for this year. So again, we are likely to have this split between services being a bit better supported and manufacturing still facing headwinds.
Jane, you know we can't let you go without getting to your dollar-yen call. 140 is where you see it, possibly with policy exiting of negative policy by this spring. So are you willing to get into the Widowmaker, Jane? Is that what that is?
You know, I've always been a little bit cautious. There was a lot of optimism at the end of last year that the yen is going to be the bull trade of this year. You know, and I was always a bit skeptical of that. I do think we can see a bit of strength. I think the market was disappointed when we saw data putting Japan into technical recession at the end of last year. But actually, some of the more forward-looking indicators are a little bit more promising, and the rhetoric of the policymakers is very suggestive that they're making preparations for an interest rate hike. So the market's thinking March, April, maybe for that hike. We think perhaps April. But I do think the yen can make a little bit of headway this year. And in the meantime, I don't think people are going to be really wanting to push dollar yen above 152 if there is the potential for an interest rate hike, you know, just around the corner.
Yeah, I mean, we've been so burned by bullish yen positioning over the past few years. It's been really misjudged. So, you know, we'll throw a little party here when they finally do exit negative rate policy. Jane, really appreciate your time this morning. Jane Foley of Rabobank. Coming up on the program, Berkshire Hathaway sees very few candidates for a big ticket deal, essentially none outside of the U.S. We're going to hear from the Oracle of Omaha next.
happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but this is, my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this. It has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
It's your Monday edition of Bloomberg Brief with me, Manus Crenny, and Danny Berger alongside me. Berkshire Hathaway says its cash pile jumped to $167 billion in the fourth quarter. Now, the chairman and CEO, Warren Buffett, you know him well, has warned that there's a lack of opportunity for meaningful deals, especially outside the United States. That means the eye-popping performance is unlikely to continue. Let's bring in Bloomberg Wealth reporter Charlie Wells. Charlie, good to see you this morning. I mean, this was a salutary warning from Warren Buffett. You know, the rationale behind $168 billion, is it protection? Is it prepare for a bit of a jolt? What is the motivation at $168 billion cash?
Yeah, I think that motivation at first blush is, you know, that feeling that you get when you're kind of at the store and you're kind of looking through all the hangers on the rack and you take some out and you just don't see anything that you want to buy. I think Warren Buffett, in his letter that he publishes annually and published over the weekend, he says that everything has been picked over, not just by Berkshire Hathaway, but by other companies. And so it's a lack of opportunities, but also probably, you know, some classic Berkshire Hathaway strategizing of kind of waiting until that greed sentiment has kind of turned down and waiting for that fear to come up and then pounce.
I love what he wrote. We hold excess cash in treasury. We hold cash and treasury bills in excess of what conventional wisdom deems necessary. I guess that chart exemplifies that. So he also says, look, we're not going to have eye-popping returns because we can't find those deals. How did that translate into the results themselves for Berkshire Hathaway?
Yeah, so over the weekend, they also reported fourth quarter earnings, and they were pretty positive. They beat for the same period last year. Operating earnings, which Buffett, of course, famously likes to focus on instead of net earnings, were better than they were in the same period. So it was about $8.5 billion compared to about $6.6 billion in the same period the year before. And they were really boosted by the heart of the Berkshire Hathaway enterprise, which, of course, is insurance. So we saw that a lot of these insurance companies were able to pass on some of those premium costs to their customers, and there were actually fewer catastrophes last year. There were fewer claims. That really boosted them, but returns were hurt a little bit by rail as well as utilities. So some issues there had to do with regulation, had to do with lower shipping, and also had to do with wildfires.
Yeah, I mean, you just look at what they were able to charge on the insurance side of the business, and you begin to understand how we're all squeezed. Look, it's the first annual letter, isn't it, since Charlie Munger passed away. How did that influence, if at all, Buffett's thinking about the company's future?
Yeah, Immerse, it was interesting. I mean, he devoted a full page to Charlie Munger, to talking about how he really was the architect of this firm, how much he influenced Buffett's thinking about investment. And so that certainly was, a focus on the history of this firm that really has risen with the rise of American consumer capitalism. But of course, there was a focus in this 16-page letter on the future. He talked about Ajit Jain, who runs the insurance side at Berkshire Hathaway, and he also talked about Greg Abel, who he says is ready to be CEO tomorrow in this letter. So certainly a look back, but also kind of setting the stage for what's next.
Speaking of planning for the future, JP Morgan CEO Jamie Dimon and his family, we learned, sold about $150 million worth of the bank's stock, according to an SEC filing. And this, Charlie, if I'm not mistaken, it is the first time Jamie Dimon has done something like this.
I mean, famously, Jamie Dimon for a long time there would tout, and the bank would tout as well, that he never sold a stock, that at certain moments when JP Morgan was in crisis, I'm thinking about 2009, I'm thinking about 2016, he doubled down and he bought shares. So yes, this is the first time that Jamie Dimon has sold shares. It was about 822,000. And this, ultimately the bank had teed this up for a while there. It's going to likely, according to some of their statements, be about 12% of Dimon and his family's holdings in JP Morgan, so significant but not a huge amount. And the bank was quick to note that Dimon remains confident in the bank and in its shares. When this announcement was made last fall, there was a little bit of gyration in the shares, but actually we saw on Friday they performed very well. And then looking back, the 18 years that Jamie Dimon has been at the helm of this bank, it's turned into a very good investment for him so far. Back when he took over, shares were $40 a share. On Friday, $183.
I mean, they could just say, look at Jeff Bezos selling $8.5 billion. This is nothing even close to that, a drop in the bucket compared to what he did with Amazon. Charlie, thank you so much. Charlie Wells there with the latest. Now, Ant Group has outbid for Credit Suisse's investment bank venture in China. The surprise bid will be subject to close regulatory scrutiny, people familiar said. We're now joined by Bloomberg's Jenny Serrain, who leads our financial coverage in the UK and Middle East. Jenny, if anything, this is a reminder that everything is not finished when it comes to the sale and unwind of Credit Suisse. So you have this Ant bid. It's more than Citadel's bid, but could they still go for what Citadel is offering, even though it's less money?
So I think that is definitely our understanding in terms of what the Chinese government would prefer. So if you think back to when they first gave Credit Suisse this license, it was really about opening up the Chinese economy to international and foreign banks. And so I think that's why you see, maybe more of a preference for the Citadel bid in that instance, despite the fact that Ant, has come in with this higher number. And so it just shows, to your point, Danny, that just everything that UBS has been trying to do as it absorbs Credit Suisse and kind of works through this big integration is absolutely not over, because I think they also have, other investors in this joint venture. There's a lot to consider on the table here now that you have really two competing bids that they have to sort through.
And there's a new sort of evolving marriage, isn't there? We've got news of $1 billion private credit deal between Goldman Sachs and the Abu Dhabi-based sovereign wealth fund Mubadala. So, is this leverage for leverage? In other words, building out the arm at Goldman's, but it's also Mubadala leveraging off the GS knowledge on the ground.
Yeah, I think it's super interesting because I think for Mubadala, at least, they've been really looking to increase their exposure to Asia, and that's really what this big private credit arm is going to look at doing, is finding those sorts of deals in Asia with actually a really specific focus on India. So I think there's going to be a lot more activity in this corridor between the Middle East and India in the coming years, and this is just sort of the latest evidence of that. But yeah, you've got two kind of big heavyweights, one on the sovereign wealth fund side, one on the asset management side, trying to make their way and muscle in here.
Yeah, well, they've certainly got ambitions, haven't they? Goldman's obviously $110 billion at the moment, and they've got ambitions, to double that in the coming years. More sovereign wealth funds to the party. Jenny, thank you very much. That's Bloomberg's Jenny Serrain. Quick snapshot of currencies this Monday morning. We're counting down to the PCE. A lot of Fed speak is going to be in play. Danny, you've got the dollar flat at the moment, 12.41. Just listening to Jane Foley there from Rabobank. She still thinks that the dollar will remain sort of triumphant. John Arthur's piece this morning, the dollar strength is looking like the new norm, benefiting from America first, rates, stocks, and even Trump uncertainty. But we're flat at the moment. We're counting down to PCE on Thursday.
Yeah, it's just this idea that the strength of the dollar, it is a structural phenomenon. It's not just about the data we're going to be coming out. And, Manna, speaking of which, we're going to walk you through some of the market-moving events to watch throughout the day and throughout the week. I think PCE might be in there. Maybe a little bit of government shutdown, too. It's a big week. Watch it here on Bloomberg.
Maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
It's Bloomberg Brief. Happy Monday. I'm Danny Berger alongside Manish Cranny in New York. Let's get you set up for your week this week, your trading week. It's going to be busy. The U.S. eco data is going to kick off today with new home sales. That hits at 10 a.m. Eastern. Then Thursday, we're going to get that headline and core PCE. That's the big event. But Tuesday, not to be missed out, we have a slew of retail earnings that will include Macy's and Lowe's. Friday is the House funding bill deadline to avert a government shutdown. So, Manis, that is what we would call a week with a variety of landmines to risk.
Yeah, or as Anne-Marie Horde-Earn said to me, welcome to America. That is politics in America, makes Brexit and Irish politics look like a walk in the park. Tesla is down by a third of 1% this morning. Hedge funds are unloading tech overall at the fastest pace in 7 months. This is a Goldman Sachs note. You've got Cathie Wood, of course, taking this opportunity, this frenetic rise that we've seen in the tech stocks to lighten up on TSMC. We know that is something which was a key position for her. And pondering whether to sell. You look at Apple, we're down by 0.2%. They were just wondering whether they will sell these smart glasses. What would that do to the headset business for them? So a little bit of a headwind for Taiwan Semiconductors, or lightening up by Cathie Wood. Doesn't seem to be challenging that. Mark Haefele goes on to talk about the amount of AI revenue between now and 2027 rising quite aggressively. There you go, NVIDIA forever.
Snapchat at one point had smart glasses that they sold. I actually bought a pair back in the day, and they look so silly that I could never bring myself to wear them. But they were these sunglasses that you could kind of take pictures with. Yeah, from Snapchat. Well, the idea was you take pictures, and then you can upload it to your Snapchat. But I look so dumb. I don't think I could stomach buying a pair of Apple ones.
You're still on Snapchat?
No, I'm too old for that.
Big on TikTok?
Hardly. Anyway, speaking of welcome to America, land of the free, home of the AI bubble, maybe Torsten Slok has this really great chart that he published.
I like this one, actually.
Showing, that the PE of the top 10 stocks right now, that's that kind of darker orange line there, is much more than it was in the 1990s. So he says, hey, if that was a bubble, certainly this is a bubble.
Well, you only ever know it's a bubble when it actually drops, when it actually, pops.
Right.
The question is this. I look at what Hartnett had to say over at Bank of America. AI, the economic growth, it is the magic sauce for stock gains. And we may have had a baby bubble, but that baby bubble in AI stocks is growing up.
I go back to Atlas. Atlas is NVIDIA holding up the global economy.
That's us at 5 a.m. every morning.
Holding up the global economy.
Holding up the roster as we kick off New York programming.
Well, on that note, surveillance is up next, so stick around for that.
They are the world.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. Mm-hmm. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Could face bigger challenges next.
Was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
We've just come off a very strong earnings season for a lot of companies, and that's why we started the year very strong.
The tech sector are very, very strong. That looks like that's going to continue.
Everyone now who is caught short, everyone who is uninvested is pulling in.
Following this exuberance now still matters a lot, and it's still telling us, actually, that there is more positive momentum to go.
This earnings story is real. It's real. And if you don't buy it, you are going to be left behind.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning, good morning. For our audience worldwide, your equity market on the S&P 500, totally unchanged. Feeling the pain, and pain has a capital AI. over at HSBC. Max Kettner, we got it wrong. Lisa, Max Kettner upgrading stocks and credit alike, I think, to neutral and overweight.
They partly reversed their stance as a result of underestimating the AI boom. I love the AI, the capital AI in pain. That was really graceful. I enjoyed that. That was nice.
I think it was nice as well.
Yeah,
especially when he basically got half the story right.
Yeah.
He called the economy right. He said we'd outperform, that rates would reprice higher. Okay, here comes the difficult bit. What does it mean for stocks? That's the bit he got wrong.
And the fact that you didn't have a disorderly repricing of rates. And I think that that has been one of the biggest distinctions, given the fact that rates have gone up, but in a sort of tick by tick by tick, not necessarily 15 basis points and then another 15 basis points, except for when they did, but then people said it was okay. It wasn't going to harm the stocks. My question is positioning. How many people are actually continuing to feel calm versus selling on the margins, particularly hedge funds, to try to cash out and broaden out this rally?
You missed Jay on Friday, Jay Poloski of TPW. Jay was absolutely fantastic, very bullish, very constructive. Here's a quote from Jay. Markets have executed a critical handoff from rate cut dependency to earnings-driven market freedom. Now, have they truly done that, or are we really talking about just one earnings report from one big company?
You know, you can say, okay, it's just NVIDIA and that's it. But if you actually look under the hood, earnings expectations, earnings performance has actually been better than expected. And the beats have been something like 77% so far this earnings season. And it's actually earnings going up from an expected 1 point something to a 7 point something year over year. So this is an actual story if you look under the hood, as much as, you know, my skepticism wants to say, no, everyone's just, you know, on something. It seems to be sort of out of
We missed that skepticism on Friday as this market was heading towards another all-time high in the S&P 500.
Thanks.
That's the markets. Let's talk about the politics. Let's play good news, bad news, and Nikki Haley. So, okay, here's the bad news. Another double-digit loss, another double-digit win for President Donald Trump. Nikki Haley, here's the good news. It could have been worse. It was 21 points. At the end of the day, it could have been 30, 40.
Yeah, absolutely. And she's saying she's going to stay in through Super Tuesday. Here's how I would categorize what happened in South Carolina. One, it was a race of domination by the former president, and his domination continues within this Republican primary, and he's likely going to be the nominee coming mid to end of March. After Super Tuesdays, a few other events, he'll likely shore up all the delegates. But it was also one of division. That nearly 40% Nikki Haley was able to get shows that this is going to be an uphill battle for the president when it comes to the general election. Fox voter analysis, 6 in 10 Haley voters say they would not support Trump in the general election. Well, that's the other part of the party that at some point he's going to have to bring in if he wants to win in November.
We've spent weeks talking about how much longer Nikki Haley can stay in this race, and ultimately that's going to come down to one thing: money. What have we learned overnight from the Koch brothers? That maybe the Koch network is no longer willing to finance this.
They're not willing to finance it any longer, but they still have a strong endorsement in her. But since they don't see the path for her to win, they want to put that capital elsewhere. So they're looking at down ballot races at the Senate and at Congress to potentially shore up some more conservative lawmakers.
They're not putting money to the Trump campaign. I think that's interesting. They might not be giving money to Haley, but if you want to look at the silver lining, at least they're not giving it to Trump, right? I mean, from her perspective, so.
Well, this is the division, and I think South Carolina showed, even though Trump dominated, the division and how difficult it's going to be for him in the general election, and maybe that's some tea leaves on who he might pick as his VP if he wants to encompass the entire Republican Party.
Ed Mills, Raymond James, a little bit later on this morning, I believe in the next hour, so look out for that conversation on this story. I want to turn to the price action. Equity futures on the S&P 500, almost totally unchanged, just pulling back just a little bit from all-time highs on the S&P 500. 424.81 on a 10-year yield, just about going nowhere on a 10-year this morning. And the euro actually just showing some strength again today. Dollar weakness, DXY negative for 5 consecutive sessions. Lisa, 108.47 on that currency pair.
Okay, Kit Jukes from Societe Generale is so entranced by this particular pair that his headline for his paper, his note today was, "The dollar stopped rallying or moving at all," and basically talking about how we know the narrative on all sides. Kit Jukes was channeling my sense of stasis in this pair. We know the story. What's going to catalyze
I'm not trying to sell it as some kind of entertaining story in foreign exchange. I'll say this, though. International got interesting last week.
It did.
9 days of gains in Chinese equities. Peter Chia of Academy saying it's a bit of a trade. I think TPW's Jay Poloski said when everyone says it's investable, maybe you should take a look, or uninvestable rather. And it's certainly looking tradable based on the last week or so.
Tradable is sort of a very nice way of saying that maybe people are holding out hope that this time the stimulus is going to be coming, because you did hear from the Chinese government some promises about the desire for people to invest more in durable durable goods. And so people now are thinking, well, maybe they're going to get some sort of fiscal package.
Well, and the CCP meeting is next week, so everyone's looking at potentially will there be more. But I love what Peter Cheer had to say last week, Jonathan. He put in his note as well at the start of this week. If you're going to not be willing to fight the Fed, why are you going to be willing to fight the CCP, especially when we know now they do not like if you sell stocks?
Don't fight the CCP. One of the headlines in that note, I saw the same thing. So equities are doing okay. Through the next hour on this programme, coming up, we'll be catching up with Sophie Lund-Yates of Hargreaves Lansdown as US growth continues to outperform. Jennifer Flitton of Invesco as Donald Trump takes another step towards the GOP nomination. And Lindsay Piegza of Stifel, head of a busy week of Fed speak with inflation data on deck. We begin with our top story, the rally behind Nvidia pushing stocks to all-time highs. But Sophie Lund-Yates of Hargreaves Lansdown has a warning. Quote, there should be questions about how sustainable Nvidia's 98% market share of GPUs is. There's also relatively high risk from the fact that 5 companies make up about half of the group's customers. Sophie joins us now for more. Now, Sophie, we should talk about who those companies are. Those big 5, they are some of the biggest companies on the planet, some of the most profitable companies around the world. Sophie, is that a source of concern or a cause for concern?
Hi, absolutely. So I would just start by saying, of course, you know, you're absolutely right. The caliber of these customers does mean that this isn't as straightforward a conversation as it would normally be. But now, it's a big but, in my opinion. Having 5 customers making up around 50% of revenue, that level of concentration is too high for me to be fully comfortable. Now, I'm not saying this is a warning sign situation because of the nature of these companies that are making up that pool. However, really, you would like to see a little bit more diversification going on, particularly when we start looking at the fact that more of these tech companies are toying with the idea of bringing tech in-house. That's not going to happen overnight, but it is something to keep an eye on.
Sophie, talk to me about those names, though, the names that are spending increasing amounts of money on this tech. How big is the risk for them?
Absolutely. So, I mean, it's definitely not risk-free, is how I would phrase that. So in terms of access to the tech that you're referring to there, I don't think that we're going to see anything switching off overnight in particular. So I do still think that obviously Nvidia is in it's a very secure pair of hands. But at the same time, when you're looking at what these companies are spending in order to keep themselves front and center of this kind of technological revolution, margins are a question mark for me. So both in terms of operationally and investor sentiment wise, I do think that that's actually a risk that is currently slightly under-recognized from my perspective.
So what do you do with that, Sophie? Do you basically move to a neutral position for U.S. equities because of the dominance of some of these NVIDIAs, excuse me, or are you going to say, you know, you kind of have to just go with the flow because that's where the crowd is?
Sure, I think really at times like this, it's an incredibly important reminder to not have all your eggs in one basket. As you know, it's an overused phrase, but it's a really important one. I certainly don't think we should be ignoring the likes of NVIDIA or just, you know, pushing them to the wayside because, you know, this frothiness that we're seeing and that concentration as well that I was discussing there. This is a higher risk option at the moment, but that doesn't mean ignoring AI. It doesn't mean ignoring tech. It just means making sure that you are also keeping an eye on those companies that do have stable income from other areas as well. But it's not just purely AI driven. You know, there are names in the sector that in my opinion are still a lot more diversified and therefore a lot more compelling.
How about the granolas? How about over in Europe? How about some of those that are the less loved than, say, the top stocks in the U.S., but also have some promise to benefit from the AI revolution and the fat revolution and other things?
Absolutely. I think Europe as a region, there are certainly corners of the market that aren't particularly exciting or compelling, in my opinion, not to sound too harsh. But I think the granolas hold a lot of promise, and they're also, because they're flying under the radar that little bit more, that makes them even more interesting, in my opinion, particularly when you start to look on that valuation metric. And to strip it back even further, so away from granolas and into actually some of the options, particularly in the UK, there are some sectors, some bread and butter stocks, I'm talking here about financials in particular, where the valuation situation is really quite compelling. You know, we have the likes of, say, I don't know, Standard Chartered, you know, they're trading at less than the value of their assets. So their price to books are incredibly low. They have incredibly well capitalized positions, which protects those lucrative returns, those dividends. And I don't think that they're being recognized either. So Europe and the UK, some certainly interesting options for those that want to have a look.
Well, if you look at Standard Chartered, though, they're heavily exposed to China. Does that make you nervous at all?
Yes, absolutely. It certainly has more kind of fingers in some more challenging pies, shall we say. But I do also think that when you look at the broader business model, for me, that's something that's particularly compelling. You know, it has a lot more income coming in from the likes of fee-generating businesses, so, you know, your transactions, your private banking, all of that side of things. And I also think the exposure to emerging markets as well is actually something that makes it more interesting on a long-term view. You know, we've seen that $850 million write-down because of its exposure to Chinese banking. That's not nothing, but actually I would also say that potentially we're through the worst of that now, which could open up some opportunity for those prepared to take a bit more risk.
Sophie, just before you go, just how relevant are interest rates to this equity market? The index level specifically, last week was another week where two-year yields climbed off the back of decent data. We spent more time talking about Nvidia than we did jobless claims. Jobless claims in at around 200K. Just how relevant is that bond market to equity risk at the moment?
Yeah, sure. Well, it still remains incredibly relevant. But what I would say here is we are seeing some really quite unprecedented times in that macroeconomic data is not being considered as seriously as the likes of Nvidia results, which to me is bonkers, but that is the world that we are living in now. So absolutely, there is of course always going to be an intersection, and it does absolutely still matter. But for now, sentiment more broadly is going to continue to be driven by the outlook statements from these big tech companies. And of course, you know, all eyes at the moment coming out on that data on Thursday for PCE numbers. And I do think that we could be in for a bit of an unpleasant surprise.
Interesting. Sophie, thanks for the update. Appreciate it. Sophie Lynn-Yates there of Hargreaves Lansdown. We're spending more time listening to Jensen than we are to Jay. It's been a big conversation for us here on this program over the last week or so. Yields climbed for a fourth consecutive week at the front end of the yield curve. Equities, all-time highs, another week of gains.
But we said this before, it's coming with earnings. And I was looking at Jurrien Timmer, and he came out with a note saying that there have been already 76% of the companies that have reported so far this season have beat expectations. And there had been expectations for a 1% earnings growth year over year for this particular quarter. Instead, it's now on track for 8%. That's what we're talking about. It's not just Nvidia. And that, I think, is what some bulls would point to.
This is the handoff that Jay Pawlowski was so excited about on Friday. Equities right now on the S&P 500. No drama to kick off your Monday morning. Almost totally unchanged. Let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Jack's Ma's and has outbid Citadel for Credit Suisse's investment bank venture in China. The bid is likely to face close regulatory scrutiny. China said to prefer a foreign buyer. Now, this poses a dilemma for UBS. Either choose between the higher local bid from Ant or the lower offer from Citadel. UBS needs to sell the business because it already holds one license in China. Ryanair, meanwhile, is warning that it could be forced to pare back its schedule during the peak summer travel season due to delays in Boeing jet deliveries. Ryanair may receive fewer than 40 Boeing 737 MAX jets before the end of June. Now, the airline originally wanted 57 MAX jets between summer 2023 and 24. CEO Michael O'Leary warns that aircraft shortages are likely to drive up European fares this summer. JP Morgan Chase CEO Jamie Dimon and his family have sold $150 million worth of the bank's stocks. It's Dimon's first sale of his shares since he took over the CEO of the bank 18 years ago. Dimon and his family sold more than 800,000 shares on Thursday. Meanwhile, shares are at a record high. And that's your Bloomberg Brief. John.
Hey, Danny. Thank you. Up next on this program, hope fading for Nikki Haley.
I'm not giving up this fight when a majority of Americans disapprove of both Donald Trump and Joe Biden.
We're going to be up here on November 5th, and we're going to look at Joe Biden. We're going to say, Joe, you're fired. Get out. Get out, Joe.
That conversation coming up next, live from New York City this morning. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Live from New York City this morning. Good morning. Equities on the S&P 500 almost totally unchanged after closing Friday at another all-time high. In the bond market, your 10-year 4.2461. The euro against the dollar 108.50. Under surveillance this morning, hope fading for Nikki Haley.
There are huge numbers of voters in our Republican primaries who are saying they want an alternative. I'm not giving up this fight when a majority of Americans disapprove of both Donald Trump and Joe Biden.
I just want to say that I have never seen the Republican Party so unified as it is right now. We're going to be up here on November 5th, and we're going to look at Joe Biden. We're going to say, Joe, you're fired. Get out, Joe.
Here's the latest, a major win by Donald Trump in a South Carolina primary over the weekend, easily defeating Nikki Haley in her home state. Haley not backing down as Michigan heads to the polls tomorrow, ahead of Super Tuesday on March 5th. Jennifer Flitzen of Invesco writing this, the math is showing that even with the most generous assumptions for Haley, Trump will win enough delegates to win the Republican nomination by March 19. Jennifer Flitzen, I'm pleased to say, joins us now. Jennifer, it's another double-digit win, Iowa, New Hampshire, and now South Carolina. You were looking to certain counties of South Carolina, including, I believe, Charleston. Can you tell us what we took away, what the lessons were from her performance there?
Yeah, look, I mean, Haley did well in Columbia, Charleston, urban areas, suburban areas. She's clearly pulling from a demographic of more educated, sophisticated voters. And that, you know, tends to be the kind of voters that come out for primaries. I mean, these are high information voters typically. But in the rural areas of South Carolina and really blue collar workers, that is Donald Trump's stronghold. So it'll be interesting going into Michigan to see if we're going to see the same sort of demographic breakdown.
Michigan and then Super Tuesday. What else are you looking for in terms of specifics?
Well, Michigan, I'm not only looking at the Haley Trump, but I'm also looking at this dynamic with President Biden. There's a movement right now among the Arab community there, especially around Dearborn, to vote uncommitted. I think that is intended to send a message to the president. But I think it's going to be a major headline issue after Michigan. And then, of course, looking at the numbers, looking at the breakdown, looking at some of these exit polls from the Haley-Trump match, right? And then that'll kind of tell us something going into these big 16 states on Super Tuesday on March 5th.
I was struck by some of the Fox News voter analysis. 6 in 10 Haley voters said they would not support Trump in the general election. What does he need to do to encompass the rest of the party ahead of November?
Right, and some of this is just typical, right? I mean, primaries are divisive. You're picking your horse, and in South Carolina, that Haley is a beloved daughter of South Carolina, and so you can see where some of that passion for her, and of course, Donald Trump is just, you know, a figure, a character that is a known entity. He is a quasi-incumbent, but he is really going to have to work his folks, his campaign, and especially in those battleground states, really work to unify the party over the next several months.
Jennifer, I want to pick up on what you were talking about with Michigan and this question of how Muslim Americans in particular are going to vote, given the fact that a lot of them are possibly saying they are going to sit out of this election and previously helped President Biden win the election. What are you looking at to understand just how entrenched some of the anger is and how that's going to affect the Michigan race?
Yeah, I mean, I listened to Debbie Dingell right? She's a congressman from Michigan who really has her thumb on the population there and listens to them, understands them. She is a messenger into the White House, and she often sort of throws the flag and says, look, you have to pay attention to these folks. And she really works with the White House to get them in contact with the right people there. But there is a lot of anger. I mean, these are people who are really suffering with their family members overseas in Gaza. And so I'm going to see what kind of movement comes out of this campaign to get these voters to stay uncommitted, and then to see over the next several months what the White House does to sort of mend that pain.
How has Gretchen Whitmer really played into this, the governor of Michigan? She's really kind of been the front woman for the re-election campaign for...
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
She promised. And then will she endorse and sort of sneak away like DeSantis, or will she endorse and be a surrogate for this election?
It's true. It's a big question. Jen, it's got to catch up. Jennifer Flitten there of Invesco. For those of you outside of the United States that may have missed how this played out on Saturday night, 7 p.m., as soon as that state and the voting closed, that state was called almost immediately. Camera pans over to South Carolina. Who's on the stage already? Donald Trump, ready to go. What didn't he talk about? Nikki Haley. Didn't mention her at all.
He doesn't need to. He's preparing himself for the general election. And, you know, to the point is that after March 5th and Super Tuesday, then there's Super Tuesday 2, which is another big day of states, March 12th. He can have this wrapped up by the middle to the end of March. So for him, it's about coming out and saying, we're taking this fight to Joe Biden, and he's ignoring Nikki Haley, and it's working.
To Jen's point, what does Nikki do? Endorse him, then walk away? And do a Ron DeSantis and not talk about it anymore?
The issue is Nikki Haley has gone very far in being very critical of not just Trump's policy, but mental acuity and competence. And I think that's an issue that not Trump himself in the campaign might have.
The dissatisfaction with a rematch of what we saw 4 years ago is not going away. And so ultimately, who is going to hold that mantle to sort of represent that dissatisfaction? Because right now we're seeming to run out of candidates.
Well, Greg Valliere has talked about the fact that maybe she becomes part of this no labels, but then does that ostracize her from a future of the Republican Party? Look, whether it's Biden or Trump that wins, there's going to be no incumbent in 2028. And that's where you're going to get a rush of new faces and voices.
What you just said, Lisa, that is the campaign for Nikki Haley. It's just not a good primary campaign. Plays well on the national stage, just plays dreadfully within the party.
So then does it just die? I mean, that's my question. Does it just sort of go away, or does someone else take up the mantle and start, you know, pounding the table?
I'll say the easy thing, sort of, we'll see. We'll see, because I don't really know. From New York City this morning, good morning.
I'm from the UK and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype or manufacturing possibilities with investment or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
By a third of 1%, a little bit softer, Lisa, on the week last week.
Here is where interest rates matter. Here is where Fed policy really comes into play, because this is arguably the sector that's most leveraged to rates remaining higher for longer. Good economic data is good news for the less capital-intensive, cash-rich companies that are minting money, less so for the rest of America.
Regional banks, small caps really struggled last week. In the bond market, off the back of this, repricing yields higher again at the front end of the curve. We're talking about 4 weeks of gains on a 2-year yield, just short of 470 now, 469. We've talked about that 420 level a few times. That's where we ended January. At the end of that Fed meeting that day, at the close of that session, 420. Repricing rates higher, Lisa, at the front end by 50 basis points. At the long end, we have a 10-year now that's at 424.61. Yields down by not even a basis point this morning. But this week, you get some supply, don't you? On the 2-year, on the 7-year, through the next 24 hours.
2-year and 5-year today, 7-year auction tomorrow. It's going to be an interesting test. And then, of course, the key metric this week, honestly, for bond markets is the PCE report, that core inflation metric that comes out on Thursday. Do we get a sense that this is sticky? And if so, how much does that change the narrative that basically stocks can keep separating, for the most part, from bonds and call into question just what stickier inflation really looks like?
We talked about it with Sunfield and Yates of Hargreaves Lansdowne, the fact that we've talked more about Nvidia for good reason and hardly anything on jobless claims. Jobless claims are around 200K. Payroll's not this Friday, if you're looking at the calendar. I know it's the first Friday of the month, but it's going to be the following week on March 8th. But still, jobless claims near 200K. Just had a massive payrolls report for the month of January. If you get that confirmed in February, you get 2 months of that. We'll see how cool, calm and collected we are about the repricing that's taking place in the bond market.
Right now, people don't seem worried about some sort of runaway inflation. They've taken off the risk of another rate hike. They basically are saying numbers look good now. They will soften. They point to credit card delinquencies ticking up. They point to cash balances going down, although I don't know what they're looking at because there's $6 trillion of cash in money market funds, and some of that's got to go to the consumer. If you start to worry about genuinely stickier, stronger economic activity, that will shift the narrative in a way that people are not prepared for. It does not seem like anyone is really counting on that as being a likelihood.
Are you ready for a narrative shift in the FX market? The euro, a little stronger again, 108.51. I know we haven't broken out of this range, Lisa, but more recently on the dollar index, DXY, just showing some weakness, even in the face and backed up by some pretty decent data stateside.
It's true. We haven't broken out, even with the U.S. trying to inflect higher. It shows that basically, if you look at the positioning under the hood, which Kit Jukes was trying to do as he tried to drum up some enthusiasm for basically what's been trading at a 200-day moving average pretty consistently, what he was saying was you could see that people are trying to position short dollar. They're trying to move to the next cycle of the phase, the next phase of the cycle, which is the reason why you're not seeing some sort of breakout. But, you know, this does tell you that if we do get some better than expected data in Europe, or if they cut rates first or whatever, that could be a catalyst for maybe something more interesting than this.
At 103.76 on the dollar. DXY negative by 0.2%. Bramo is bored to death by it.
Well,
Under
come
surveillance
on.
this morning, let's get to your top stories. This one more interesting. Famed ETF manager Cathie Wood selling into the AI frenzy. ARK's autonomous technology and robotics ETF trimming shares of Taiwan Semiconductor and NVIDIA on Friday. Wood's flagship ETF is also missing out on the rally in the world's largest chip maker and is lagging the S&P 500. The ARK Innovation ETF's largest holdings, Coinbase and Tesla, are both lower to start the year. ARK Investment Management is yet to comment after our reporting here at Bloomberg. This is what underperformance looks like off the back of not holding enough of what is really outperforming. And we talked about this last week. The career risk now of not owning NVIDIA after the run-up of last year and the repeat act so far in 2024.
The career risk of trying to be contrarian or trying to move into less loved stocks, albeit even within the Magnificent Seven, is really highlighted by Cathie Wood. I will say, though, she's not alone, and people love to hate on her because she's gotten a number of calls wrong, and she's basically been the poster child of a lot of the tech enthusiasm on both directions, all directions. But hedge funds also are cashing out of a lot of tech stocks right now. And it's basically just trying to cash out at the top and then shift, rotate. But it just hasn't worked again and again, and that's really one of the dilemmas here.
Well, she hasn't held on to this since 2023. She says these three synonyms: easy, really expensive, obvious. But I think to your point, Jonathan, the career risk, like that one analyst who the night before when NVIDIA results came out had to sell, and then the next morning when you see what it does after market, had a quick hold and buy.
Some of the things that you just said, though, you could have said at any point last year. Easy, obvious, maybe a little expensive, and then what happened last year and what's happened at the start of this year.
But that's the reason why this is such a difficult call. It's so hard to be an interesting thinker in a market like this, to be contrarian, to say, you know, you're missing this, because everybody is just staring it in the face and having to load in. It kind of goes against everything ingrained in good investment kind of thesis.
Do you want to be right or do you want to sound smart? That's the decision you've got to make, right? You know, ultimately, NVIDIA check for you. We're positive by a little more than 1% in the pre-market. Here's your next story. The White House ramping up pressure on House Republicans to pass aid for Israel and Ukraine. National Security Advisor Jake Sullivan calling on Speaker Mike Johnson to, quote, bust through the politics in his caucus. Senate Majority Leader Chuck Schumer leading a congressional delegation to Ukraine over the weekend, looking to reassure President Zelensky. Ukraine marking 2 years since Russia's invasion on Saturday. Zelensky saying 31,000 troops, AMH, have died in the war so far.
Yeah, and that's the first time we saw him really put this kind of figure on those troop numbers. Schumer was there over the weekend, and what you've heard over the entire weekend, whether it's Jake Sullivan, Senate Majority Leader Schumer, was that it's not enough in terms of what Ukraine has right now on the battlefield. And for them to continue, they're going to need to have this U.S. aid. Speaker Johnson at the moment doesn't want to deal with his right flank, so he's not putting this on the floor. But tomorrow's going to be a key day. President Biden has the top 4 lawmakers from the House and the Senate coming over: McConnell, Schumer, Hakeem Jeffries, Speaker Johnson. Not just going to talk about this, but also the government shutdown. Potentially we'll read the tea leaves on how close they are in all of these: a government shutdown or aid to Ukraine.
That's the latest on Ukraine. Let's get the latest in the Middle East. Israeli Prime Minister Benjamin Netanyahu looking to ease tensions between his country and the United States. Netanyahu saying there will be a plan for civilians ahead of an expected assault on Rafah in the south of Gaza.
We agree on this. I mean, we don't have to be prodded. It's we're on the same page with the U.S. on this because that's how we do it. The reason you have that population in Rafah is because we actually cleared them away from the other places, the zones, combat zones that we had. That's why they're there. So now there's room for them to go north of Rafah to the places that we've already finished fighting in.
Over 1 million civilians are believed to be sheltering in the south of the enclave. Netanyahu adding there is no timeline for a deal with Hamas for a possible pause in fighting and the release of Israeli hostages. Norman Rule, the senior U.S. intelligence official, joins us now to discuss. Norman, you saw the language used there by Benjamin Netanyahu saying that they will help civilians flee Rafah. How do you think that will work in practice? How difficult will that be?
Good morning. We're talking about a very challenging operation because of the large number of civilians. The city of Rafah now has about 1.4 million civilians in it. This is a very small geography. We're talking about 12 miles approximately is the width of Gaza at this point. So the Israelis are going to have to move the population in several areas. There is a place called El Muwasa to the west. There's an area to the east. And of course, moving, as the prime minister stated, north into somewhat cleared areas in Khan Yunis. But the infrastructure is devastated, so they're going to require a lot of humanitarian support. The U.S. and the international community are working on this.
Jake Sullivan on CNN said that we could potentially see something more firm for a hostage deal in the, quote, coming days. That's not the sense I got from Benjamin Netanyahu on Face the Nation when he was talking about the crazy demands of Hamas. How big is that gap between the Biden White House and Netanyahu?
I don't think the gap is between the Biden White House and Netanyahu, but rather how each is perceiving Hamas's position. Currently, there is a general understanding of the contours for a hostage agreement between Egypt, Qatar, the United States, and Israel. About 40 Israelis would be released by Hamas for about 300 Palestinian prisoners and a 6-week ceasefire. Hamas has not yet accepted this, and although there are reports that Hamas has reduced its previous demands, which included a withdrawal of all Israeli forces and an end to the conflict, we don't have that confirmation yet from Hamas.
On one hand, Netanyahu is planning to try to evacuate these Palestinians and planning for a ground assault on Rafah. On the other hand, he's dealing with these potential hostage negotiations. Which one is it going to be?
Well, it's going to have to be both. The Israelis cannot cease their efforts to eradicate Hamas as a long-term threat to Israel. That is something that not just the Netanyahu government, but the bulk of the Israeli people believe in. At the same time, there is genuine political pressure upon the Netanyahu government to obtain the release of the hostages. About 134 remain, a number of which are dead. That's not going away either. So this is a very difficult simultaneous diplomatic dance.
In the meantime, people are looking at the potential commercial implications and looking at the Red Sea and noticing that things are not changing. The Houthi attacks are continuing and ship routes are being changed on an ongoing basis. Norm, do you see any sense that there is going to be a shift to that, or is this the new normal?
This is the new normal for the foreseeable future. The United States and its partners have committed to defending ships, escorting them to protect them from missile and drone attacks. And when we have a sense of the threat within Yemen itself, to conduct preemptive strikes to avoid attacks. This does not mean an end to all attacks. We've seen yesterday the Houthis fired a missile which missed a U.S. vessel, but it was only a few days ago that a Houthi missile struck a fertilizer ship, which is the first ship lost in this conflict. That ship remains listing in the area and could produce a considerable environmental disaster if it were to sink. I should add that we're attempting to send tugs to that ship to get it to Djibouti, but the Houthis have said that unless certain demands are met, they won't allow the ship to be evacuated.
So what's the purpose of some of these attacks that we've seen by the U.S. and by UK allies against Houthi militants? What's the purpose of them if this is the new normal?
Well, the attacks have significantly degraded Houthi capabilities. It has reduced the number of attacks the Houthis are capable of undertaking, and it has degraded the long-term offensive capabilities of the Houthis. This allows some traffic to get through. The French escorted one of their ships through the Red Sea with U.S. and UK assistance over the last few days. The problem is we're not achieving the old normal of what's going on. That has tremendous consequences for Egypt, which is losing hundreds of millions of dollars of revenue, and the international economy as a whole. We're just going to have to continue this, and the administration hopes that a ceasefire in Gaza will take away the energy from the Houthi drivers for these attacks. I'm not convinced.
Norman, appreciate the update, sir. Thanks for being with us. Norman Rule there, former senior U.S. intelligence official on the latest in the Middle East. Lisa, the new normal is expensive. Port of LA director was with us on Friday, second busiest January on record. The record was coming out of the pandemic. So we're getting those kind of numbers going through the Port of LA because of the disruption you're seeing at the Panama Canal, because of the water levels, and because of this in the Middle East.
And who is really expensing or covering that expense? You said it's expensive, but for who? It's not necessarily the United States. This is much more for Europe. So at what point is that going to be an increasing concern for European companies in a way the U.S. just isn't feeling?
Well, this is what the British Chamber of Commerce has come out and said. This is affecting more than half of UK exports and their manufacturers. This is a big issue for European goods and on these vessels. Less so for the oil tankers, willing to go around the Horn of Africa. You have a tremendous amount of U.S. oil coming onto the sea, but these goods, so goods inflation is something to watch.
That's the latest on the Red Sea. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. A powerful Charles Koch-backed network announced it will no longer fund Nikki Haley's presidential campaign. It's a major reversal. Much of the Republican donor class had thrown its weight and money behind Haley as an alternative to Donald Trump. Haley was defeated in her home state of South Carolina over the weekend with a 20-point loss to Trump. Haley has vowed to stay in the race until Super Tuesday on March 5th. Goldman Sachs has won a $1 billion private credit deal with Mubadala. They plan to invest in the Asia-Pacific region with a focus on India. The head of direct lending at Goldman's money management unit said, quote, "We want to partner up with investors who have Asia exposure, and they want to go with a platform that has experience and track record." AT&T customers will receive a $5 billing credit after last week's widespread outage. The company says $5 is the average cost of a full day's service. Hundreds of thousands of subscribers were impacted by Thursday's disruption. AT&T blamed an incorrect process while it was expanding its wireless network. And that's your Bloomberg Brief. John.
Danny, thank you. Just excited about my $5 credit.
You're going to claim it?
I'm going to leave that there. Up next on this program, the Fed's preferred inflation measure on deck.
If I was a central banker, I would be aiming at a actually long journey back to 2%. I wouldn't rush to get back to 2%.
The bumpy road to 2% up next.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television.